Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, July 24th. We are getting ready to end out the month of July, and to end it out, we have a lot of earnings to get through. Yesterday was the first day where we really kicked off the earnings that matter, the earnings that are important, the earnings that are going to move the markets. I'm talking about Tesla and Google, and boy, oh boy, do we have a lot to analyze in regards to Tesla and Google. So we'll get into those as we start off the show and talk about the one that's red and the one that's green, which based on how the earnings calls went, not even the earnings numbers, the earnings calls, it's kind of obvious which one's red and which one's green. And so we'll talk about that. Macro, we have some jobs claims this morning, which were not that bad. So we'll talk about that in the context of what that means for the broader S&P 500, broader market trajectory. Trump has made a bunch of headlines since yesterday. He spoke at the DC AI Summit, and, well, he said a lot of things that were pretty bullish for the semiconductors. And so we'll talk about that, bullish for AI in general. He is also meeting Jerome Powell today, which is going to be pretty interesting in my opinion. He's going to be visiting the Fed building and seeing Jerome Powell. There's only been 3 times in history where the president has actually went to the Fed building, and we'll talk about some of the implications of that, but we'll see if that matters in regards to, changing Jay Powell's mind. Probably not, but that will be a story today that we discuss as well. Good morning, everybody. Thank you for being here. Tessie, she's down almost 7% in the pre-markets. Goog, on the other hand, is up almost 4% in the pre-market. So we'll get deeper into the numbers and talk about what's going on. But Google's green, 197. Google, after those earnings, Google deserves to be like $215 minimum. I mean, those earnings were just phenomenal. We'll go deeper into it and talk about why I, as a Google shareholder, am very, very proud of those earnings and think that if the street doesn't lose their mind this morning, this stock should pass 200 easily. Then again, it's Wall Street. It's the end of July. You might have people taking profits into this. Google is up 30% from the 155-ish range a couple of weeks ago. So I could see it selling off, but I really do think when you look at those numbers, this is a stock that should not be any lower than 215. So 197 right here on Google. Tesla, on the other hand, it was not a good earnings call. It was not a good earnings call. Now, we'll get deeper into it, but if you had covered calls, congrats, because they were absolutely printing. If you're heavy allocated into Tesla this year, this is just one of those calls that didn't really, my thing is, it didn't change anything if you're a bear. It didn't change anything if you're a bull. It was just one of those calls that wasn't filled with excitement. The numbers were the numbers kind of came in as expected, missed a little bit here and there, but nothing too crazy. I think the reason it's down 7% is based on some of the stuff Elon said. I would not be surprised if it reverses. I would also not be surprised if it tanks another 7%. Maybe this is max pain, but we will see when the market opens, and we'll go deeper into those numbers as well. UNH, literally 2 seconds before I went live, they confirmed a DOJ investigation. It fell below 280. Right now it's at 281. We don't have too many updates on this investigation yet. We're going to learn more, but the thing that we do know is that the UNH confirmed Thursday it's under criminal and civil investigation by the DOJ over its Medicare Advantage billing practices. The company acknowledged the probe after reports earlier this year alleged pressures on doctors to submit diagnoses that boosted payments. Obviously, this is one of the main reasons why UNH has been down since, since May. Fell from 650 down to 240 on the lows. Right now it's at like 279. These are the headlines that have been horrible for UNH, and these DOJ headlines are real in terms of the impact it can have on the narrative. Obviously, the company is producing $25 billion of free cash flow, so the numbers themselves show that it's intrinsically undervalued. But, I mean, yeah, if the DOJ is investigating you for criminal practices, like, that's not the best thing in the world. And so that's why that stock right here is down about 3.73%. All right, let's get into it. We got a lot of stuff to talk about. Thank you, everybody, for being here again. We got earnings to discuss. What earnings do we have this morning? I actually didn't check. We'll look at those as well. Okay, nothing too crazy. We got American Airlines, Honeywell, NASDAQ. We'll look at all those as well. After hours today, we have Intel, Coca-Cola, and Deckers. Those are the 3 big ones we have. And then tomorrow, Phillips 66, HCA Healthcare, nothing too crazy. So next week is when we get into Robinhood and Grab and Meta and Microsoft and all those companies. And we will continue on with the Q2 earnings. All right, cool. So let's get started. I think let's start off with, actually, let's start off with this. Let's play this one clip. So Trump was at the AI conference yesterday. Before we get into Tesla and Google, I thought this was rather hilarious. Here's what he said about Nvidia.
I said, look, we'll break this guy up. This is before I learned the facts of life. I said, we'll break him up. They said, don't say it's very hard. I said, why? I said, what percentages of the market does he have? Sir, he has 100%. I said, who the hell is he? What's his name? His name is Jensen Wong, Nvidia. I said, what the hell is Nvidia? I've never heard of it before. He said, you don't want to know about it, sir. I figured we could go in and we could sort of break him up a little bit, get him a little competition. And I found out it's not easy in that business. I said, supposing we put the greatest minds together and they work hand in hand for a couple of years. He said, no, it would take at least 10 years to catch him if he ran Nvidia totally incompetently from now on. So I said, all right, let's go on to the next one. And then I got to know Jensen, and now I see why. Jensen, will you stand up? What a job. What a job you've done. Man. Great. He's a great guy, too.
So part of the reason I'm playing that clip, outside of the fact that it's pretty hilarious that he thought he was going to be able to break them up, and then he realized he can't because they're Nvidia. There's no one who can even compete. I mean, even if you broke them up, you break up a company for more competition, no one can compete with them. No one can compete. And that is indicative of what's going on, particularly around Google, which is the first earnings that we're going to get into. Google raised their CapEx from $75 billion to $85 billion. The reason Nvidia is up in the pre-markets and the reason why Broadcom is up in the pre-markets. Broadcom right here did hit all-time highs yesterday. Right now it's at 288. And then Nvidia trying to crack back over 173, 172.18 is because a lot of that CapEx is going to Nvidia. A lot of that CapEx is ultimately going to Nvidia. Google has their own proprietary TPUs, but at the end of the day, they still need GPUs in order to do what they need to do. And it's also indicative of the sign of the times. Like, we are not going to see a company meaningfully take away market share from Nvidia simply because they are that ahead of the competition, to the point where even the government realizes breaking them up wouldn't even do anything to make competition more meaningful inside of the United States. And because of the product that Nvidia is selling, which is one of the best products in the world right now, these GPUs, you are getting the types of earnings you're getting on Google. So what did Google put up? I think they crushed 96.4 versus 94 billion on revenues expected, growing 14% year over year, 231 versus 218 on EPS. That beat. YouTube, 9.8 versus 9.5 billion. That also beat. Now, search, which was the most important metric, had the most bearish narrative attached to it over the past basically 5 months. That grew 11.7%. The street thought they would barely grow 8%. Last year, they grew 13%. So, the idea that search is dying, I mean, no, it's not growing as much as it was year over year compared to last year's rate of growth, but it is absolutely not dying. And against expectations, which is what really matters on Wall Street, it destroyed expectations. Most people did not think it would put up almost 12% growth. So I think when you look at Google, you have to do a real reevaluation on what you think is the AI narrative if your assumption is that AI is dead. Gemini, their GPT Grok competitor, has 450 million monthly active users, up from 400 million. And Search AI Overviews now has 2 billion monthly active users, which I am one of. I'm a daily active user because I use it every single day on this show to be able to get more information. So, I mean, if you're long Google, I don't think you sell here. I mean, I'm not selling here. If anything, I think obviously the risk reward is not like what it was at 150, 160, but still, this is a stock that does not deserve to be anywhere below that 215, 220 level based on these numbers and based on the expectations for what they're going to have in the future. I don't think we are going to see their growth slow down across YouTube. I don't think we're going to see their growth slow down across cloud, which is one of their fastest growing sectors as well, 13.5 billion, also 32% operating margins across the board, which is very good. And I don't think their growth is going to slow down across search. Now, search may change in terms of how they monetize it, but this was supposed to be the quarter where search showed, hey, like GPT, Grok, Anthropic, all these companies are taking away market share from one of the most profitable businesses on the planet that Google has had a monopoly on basically for the past 20 years. And that's not happening. It's not happening yet. So, I mean, there's more stuff we'll talk about when we go deeper into Google, but it's just one of those earnings where you feel pretty proud to be a shareholder. Sundar, I think, crushed the earnings call. There was nothing he said that was weird or like a red flag or anything. I've yet to find a red flag in the numbers, not from the qualitative guidance we got from management or from any of the quantitative numbers. And again, when you look at a company doing $28 billion of profit a quarter, they're going to do almost $400 billion of revenue this year. It's just really hard to be bearish. Really, really hard to be bearish. So if you've been long Google this whole year, I think you stay long. It is still one of the cheapest Mag 7 names. And I don't think we're going to get any lack of execution going into the next 2 quarters, primarily because the lack of execution would come from the AI narrative not being in Google's favor. And that's just not what we're seeing. Maybe that happens in the future, but in these numbers, that is not what we're seeing. Now, Tesla, little bit of the opposite. So Tesla right here, 310.8. I think it deserves to probably be down 7% in the pre-market, and we'll see if this holds or if this continues to dump. I mean, the numbers obviously were not the best, but they kind of came in line with expectations. 22.5 versus 22.7 billion, and then EPS 0.40 versus 0.42. Gross margins did have a little bit of a beat, 17.2 versus 16.5. Elon said, we continue to expand our vehicle offering, including first builds of a more affordable model in June with volume production planned for the second half of 2025. Additionally, we continue development of Semi and Cybercab, both slated for the volume production in 2026. Here's my thing on Tessie. The numbers were the numbers. Everyone knew the numbers were going to suck. One of the reasons why they had their free cash flow go down 89% is because they spent a lot of their operating cash flow on building out, on beginning to invest in building out new models. So although that number looks really bad, the street's not like, it doesn't seem like the street is that upset about it, because you can see why they use their OPEX or their operating cash flow to be able to fund certain investments, which is decreasing their free cash flow. So it's like, it should be a one-time thing, and next quarter should get back to that 700 million level. It shouldn't be at like 150 million, which was like one of the worst numbers that Tesla showed up. But I don't think that's why it's down 7%. I think it's down 7% right here because Elon is the reason this company is even worth anywhere near $1 trillion. And unfortunately, and a lot of you guys were with me on the call, it was a really bad call, dude. It was just a horrible call. It was one of those calls where you're like, where's the excitement? Where's the energy? Where's the leadership on the future vision? And maybe Elon just didn't feel like showing up yesterday to really bring that type of energy. Sometimes he does, sometimes he doesn't. Yesterday was one of those calls where he didn't. And that's just my opinion. You can disagree with it, but I did not feel the energy as a shareholder in that call. I mean, it got to a point where the CFO started like saying certain things, and Elon had to interrupt the CFO just to confirm like things that needed to be answered. So for example, they said, hey, what's going on with the new affordable vehicle? And the CFO was trying to say, well, we don't need to talk about that. And then Elon was like, let's just let the cat out of the bag. It's a smaller Model Y. It's a stripped down Model Y. Right. And so it's like, finally, we got confirmation that, okay, this affordable vehicle that you've been touting for 2 years, it's an affordable Model Y. Like, that's all we needed to know. And what does affordable mean? Hopefully that means 30K and below. But like, they finally gave us some confirmation. Like, was that so hard to do? Like, they couldn't have done that months ago to get analysts to understand what it is? No, but like they finally did it on this call, and they did it begrudgingly. So that was one thing that was really boring. The other thing that sucked is they asked, there was a retail question about XAI, and they're like, hey, are you guys going to make an investment in XAI? And the CFO is like, oh, this is not the forum to discuss that. And then Elon again had to interrupt him and be like, well, we'll talk about it at a different call. Yeah, Elon's answer wasn't that good either. And I'm like, what do you mean this is not the forum to discuss it? Elon is distracted by XAI. There's no way you can say that's not true. Obviously, he's spending time at XAI. That's taking away from Tesla, which is people are investing in Tesla, not XAI, the average retail investor. Number two, Grok is going to be incorporated into Tesla. That's coming from XAI. So you would think that Tesla shareholders have a vested interest in making sure if their car is going to be an AI native car, that like we care about the company that's producing that AI model. And then three, Tesla shareholders have missed every funding opportunity for Elon's XAI for whatever reason. My tinfoil hat theory, which I don't even think is that tinfoil hat, is because Elon wanted leverage over the pay package to be able to make sure that if he did get ousted out of Tesla, he would have another company to go to, and that Tesla didn't have a stake in that company so that, he could have 100% stake. And so Tesla shareholders are wondering, hey, is there a shot that we can get an investment in this company? And to tell shareholders this is not the forum to discuss it, I mean, what type of nonsense response is that? Like, that's just ridiculous. And so there were some highlights of the call in which in terms of Elon talking about robotaxi that we'll get into, but overall, it was not one of those calls that gives you a ton of excitement. Now, having said that, am I selling my Tesla? No. I am loving the covered call premiums. In fact, I'm going to be rolling my covered calls in today and collecting even more premium, which is one of the main reasons why I bought Tesla, is that I built out positions in a lot of the names that I wanted to build out. The majority of capital this year, Nvidia, Hood, Palantir. So those names have done very well. Now it is time for me to finally start building out the position in Tesla. Obviously, you got to bite the bullet at some point. You're never going to be able to perfectly time when to buy, when to sell. But the good thing is if it's range bound, which I think I've been pretty clear about saying during my sort of beginning of the thesis for why I want to buy Tesla, I think it's range bound between 280 and 350. I don't see it going above 350. And if it does, it's probably just based on hype. And below 280, I think it's a little bit too much fear. That is the range to sell covered calls on, which is really good because there are gamblers out there that, for example, my mom, she sold a 340 covered call for this Friday. Someone paid my mom $800 to assume Tesla was going to go to 350 because 340 plus $8 of the premium is what it needed to get to even be in the money. And yeah, that gambler just lost all their money. And my mom collected it on the covered call. So I think that's one of the reasons to own the name if you care about that from an income perspective. And then number two, I do think Tesla is going to be one of the best manifestations of physical AI. It's going to take some quarters, potentially even some years for that to manifest. And while that is manifesting, I think that is the time to build out a position. Here is Dan Ives today on the Tesla call and what he thought about the overall earnings.
12%, vehicles delivered down, average selling price down, and yet you're at $500. Tell me why.
Yeah, I mean, look, the quarter itself, nothing to write home about. But I mean, our view, it's about autonomous robotics. AI is the future for Tesla. So to me, yeah, it's a rough few quarters ahead. But I believe autonomous, we are in the beginning. What's going to be $1 trillion valuation alone for Tesla. So that's why I don't get so concerned when we talk about deliveries, which actually were kind of in line. You know, when we look at what's going to happen in the second half, the story here, when it comes to physical AI, two best ones out there, it's going to be Tesla and Nvidia.
Moving from a pre-autonomy to a post-autonomy world. Did he do enough on the call last night to convince investors that it's going to be smooth sailing?
Look, I mean, obviously the call, you know, definitely some could have criticism in terms of promising so much. Look, my view is if 20 to 30% of what he promised you see in the next year, this is a stock that's up 70, 80% from here. So that's why when I look at Tesla, I don't focus, and we've talked about it so much in the show over the years, I don't focus near-term deliveries, what that means in terms of, EV tax credits. This is an autonomous robotic story. And I think, look, the AI revolution, as we saw from Alphabet, I mean, we are just in the early days of this playing out.
Maybe I'm Chicken Little, but I was looking at this press conference. I was reading this and I was thinking, this is a disaster. I mean, essentially, this was a dream stock, and suddenly they're talking about tax credits and things of that nature. They used to talk about an affordable vehicle. Now they're talking about a stripped down Model Y that doesn't sound that sexy at all, and they're going to expedite production of other vehicles and put that on hold. What would it take for you to get bearish?
Yeah, look, I mean, you bring up great points, and that will be the bearish points. And when it comes to the affordable next vehicle, is that just going to be a stripped down version? Look, Lisa, my view is that it comes down to like robotaxi. If you're in 25 cities in the next year and you actually start to get volume production of Optimus when it comes to robotics, I think 90% of the future value is going to be in the AI story, not on the actual deliveries in terms of cars out there. You have 10 million vehicles in terms of Teslas out there. It's all about the data. And I believe the big thing is going to be the shareholder meeting where they'll have a significant investment in XAI. And I think that's where you get more of a wartime CEO in Musk. And I think that's really going to be the difference.
Were you satisfied?
Look, I ultimately think Dan Ives is correct about this. At the end of the day, no one could be buying Tesla for the numbers. I didn't buy Tesla for the numbers. You're buying Tesla because you believe in the future potential, and you ultimately have to accept that at some point you're gonna need to DCA if you want to buy into the same. Whether you buy it at 280, 290, 300, if it falls to 275 today, if you have to buy at 330, whatever price you buy it at, is Tesla really worth 335 on a numerical basis? No. Is Tesla really worth 280? No. Like the fair value for Tesla, if we're really looking at just pure numbers and not the potential or Elon or anything like that, it's probably well below $100 if you give it a basic auto multiple on it. But that's never how Tesla's traded. That's never how Tesla's going to trade. Maybe it does in the future and I'm wrong, but that's the nature of ultimately the religion that follows the same. So then the question becomes, how do you position yourself when you do buy Tesla? And I think that the hardest part for a lot of the Tesla bulls this year has been if they're over leveraged or over allocated to Tesla as their number one holding, and they aren't number one in a name like Nvidia or even like a Amazon or Meta that have also had pretty good years. This is just massively outperformed. And it's up from the 220 level back in March when Tim Waltz basically gave us he essentially called the bottom there. So that's nice. It could have still be stuck at 220. But it's not, now it's at 311. It's just not outperforming as much as before. So I think the ways to nuance that is selling some covered calls to offset your cost basis is one way to at least get some income from it. Number two is making sure it is a position that is not taking up the majority of the portfolio if the stock simply has many headwinds that Elon has clearly identified. Elon literally said Q3 2025, Q4 2025, Q1 2026, and Q2 2026 are going to face material economic weakness. He said this word for word yesterday because of the lack of carbon credits and the EV tax credit going away. And he said by the second half of 2026, which he might be off on the timeline, it might be 2027, or he might be right about this, but it's going to be a minimum year wait until robotaxis begin creating an inflection in the unit economics. Right now, Tesla is still one of the only growth stocks that has a massive multiple that is not growing. EPS and revenue are down double digits year over year. So I think from that perspective, for someone like myself, it is a smaller position in the portfolio because a lot of the other main positions are built out. And I'm happy to at least begin the process of developing that position for the long term, not because I expect this thing to go to 350. In fact, if it went to 350 or 375, I would feel very confused because it does not deserve that. So the lower it goes, the better chance I have of really building out a position. But I think every Tesla bull needs to be realistic with themselves. You know, when the CEO is saying, hey, the earnings are not going to be that good for the next couple quarters, you just have to recognize that. Granted, it's Tesla. And if this rebounds because people just want to get allocation to it because they really do believe in what Dan Ives is saying, that this is the future of autonomy, AI, robotics, etc., I can understand why it maintains its multiple. I do not see this thing going to the low 200s. I just don't. I really don't. I'll put a poll in the chat. Let's see what people think about this. I know Kris tweeted yesterday that this is going below 200. I disagree with that. And maybe I'll be wrong, but I do not think this goes below 200. I could see 280, 270. I could even see 250. Below 200, I think is too much fear. I think it's too much fear for the potential of what Tesla can become. So Tesla, do we see, let's say 220 and below this year? 220 and below this year. What do you guys think? Obviously, we'll see how it opens when the market opens in about 20 minutes. But overall, earnings, not the best call. I expect Google to really make a move above 200 today. If it doesn't, that's just confusing. But I don't really expect Tesla to go anywhere below 270. Could I see below 300 today? Sure. But that might end up being max fear. And then we'll see ultimately if that dip gets bought. So that's what we got on Tesla. All right, we got a lot of other headlines. We will see how Tesla and Google open up in the next 20 minutes. Ethereum. I did an Ethereum deep dive yesterday. I'm not going to lie, guys. I think I am Ethereum pilled. I have not bought my first ETH yet. I have a little bit of BMNR. By the way, speaking of BMNR, your boy Tom Lee, he increased his holdings to 2 billion of ETH. It was 1 billion last week. They had about 300,000 Ethereum. Now they have 560,000 Ethereum. ETH's market cap or BMNR's market cap, I believe, is right now 3.1 billion, and the ETH on their balance sheet is about 2.1. So the MNAV is starting to decrease as they acquire more Ethereum, which is good for shareholders. But it's also good because they can stake more Ethereum, and obviously they can if Ethereum's price does start to go up, they start to get the value from Ethereum going higher. The reason I'm starting to get Ethereum pilled, and I really do recommend everyone watch that podcast. I mean, I've already had kind of some of these thoughts, and I can go deeper in it later. But in a nutshell, what I got from the deep dive, and we had two people on that really do know what they're talking about when it comes to Ethereum. They've been in the industry for the past 10 years. What I got from this is that tokenization, which is something that I've been getting a lot more interested in, obviously because Robinhood introduced it. And so it forced me as a shareholder in that company to understand what Vlad is trying to do here. Tokenization to me is freedom. Tokenization is respecting the sovereignty of the individual. What do I mean by that? I mean, everyone across the world should have access to be able to trade any asset. And in order to do that, everything needs to be tokenized. And in order for everything to be tokenized, AKA not structured through some NASDAQ or New York Stock Exchange just for people to be able to buy an asset, because a lot of us that live in the United States, even people that live in Europe, were able to buy Nvidia at $90 a couple months ago by pressing a couple buttons. We have the freedom, the autonomy to change our financial trajectory, our financial mobility because of that infrastructure being in place. A lot of other parts of the world don't have that. And Ethereum is the blockchain that all these tokenization platforms are building on top of because of its utility and because of it being a massive ecosystem for decentralized finance. And that is one thesis. And the second thesis is stablecoins. I think you put those two together, that's your bull case on Ethereum. It's not that hard. It's really not that hard. Wall Street across the board is embracing Ethereum from a variety of different tokenized platforms. We saw yesterday Goldman Sachs is getting ready to unveil tokenized money market funds. That's going to be running on Ethereum, whether a layer 2 or directly on the blockchain, which is going to be very important. And then number 2, if stablecoins become one of the major ways that transactions cross-border and domestically take place because of the instant settlement and all the other features that stablecoins provide, that's also going to be benefiting Ethereum. That's it. It's a pretty simple thesis. And so I really do recommend people watching that deep dive. I think it was good. We went pretty deep over the course of an hour and a half of why we should be excited about Ethereum. We covered the dilution concerns. We covered the fixed supply versus Bitcoin. I mean, there's a lot of things we go into. Haven't bought my first ETH yet, but I think long-term, if Wall Street's embracing this, then they're going to have a incentive to get this higher, just like they did with Bitcoin. Now, they did it with Bitcoin via ETFs versus like actually making Bitcoin useful, because it's not useful other than like being a store of value. But I think with Ethereum, they're going to focus on its utility. And if that utility goes higher and these treasuries continue to buy more ETH, we're going to see a lot more buying pressure, which should overall help the company. Do you like ETH more than Bitcoin? I don't think I'm enough of a crypto bro to say I like ETH more than Bitcoin. I mean, I think Bitcoin as an asset class that is a hedge against the insane debasing of our currency in the United States, yeah, it makes a lot of sense. But I think if we're all honest, we know that Bitcoin's not that useful, right? No one's like doing anything on Bitcoin. Ethereum, just in the past couple of weeks, we've seen all these different things happen on Ethereum. So I don't think I have an opinion one or the other, but I do think that A, both are good for Robinhood, which is kind of like my main exposure to get to those crypto assets. And B, I think Ethereum is going to be valuable. Now, does that mean buy the treasuries? I don't know. I really don't know. I mean, if they turn into a MicroStrategy of Ethereum, maybe. And I think there's a lot of ways Tom Lee has outlined they can be more productive than a MicroStrategy, because MSTR is really just holding it and believing that the options market is going to create a lot of volatility, which will be good for the stock price. They're not really lending out their Bitcoin that much, but Ethereum and these Ethereum treasuries can do a lot of things with ETH on the balance sheet. And that theoretically could yield more ETH per share, which justifies the MNAV that you're paying. So I'm not sold on the treasuries, but I do think the asset is going to be incredible. And if that's the case, then not wild to be allocated to it over the coming decade. So there you go. That's what we got on Ethereum. Okay, some headlines in the pre-market as we're getting into this market open in the next 15 minutes. B is going to power Oracle AI data centers with fuel cells. Bloom Energy will deploy its fuel cell tech at the select Oracle cloud infrastructure data centers across the U.S. to help support blooming AI and cloud demand. The systems can deliver clean on-site power for full data centers within 90 days. That stock, I've never heard of Bloom Energy. I don't know if you guys have heard of it. That stock's up 12%. There you go. $6 billion market cap. These energy names are becoming more and more important as we learn about the amount of energy is needed to succeed when it comes to AI. So there you go. Bloom Energy, if anyone's in that. That's green. That's green. So Phil says I've held it for 4 years now. All right. So some of you guys have been into it, but that one is green right here. Speaking of energy, Jensen Huang was at the AI conference yesterday, and he did have some thoughts on energy and the future of energy. So here's a clip of Jensen speaking on energy and ultimately how vital it is going to be. He did have an endorsement of Mr. Trump, and he did say that, hey, one of America's greatest assets right now is Donald Trump when it comes to AI.
All revolutionized. The one part that we observed and made a great contribution to is that in order to sustain those applications, you need factories of AI. You have to produce AI. Unlike software, you write the software and that's it. In the case of AI, you have to continuously produce it, generate the tokens. Right. In a lot of the same ways that energy production was a large part of the economy a couple, 200-300 years ago, I think it actually peaked out at 30%. There's going to be a whole industry of just producing tokens. And this is going to be the new infrastructure, just as we have the energy production infrastructure, we have the internet infrastructure, and we got to build out that plumbing. And now we have to build out the AI infrastructure. My sense is that we're probably, a couple of $100 billion, maybe a few $100 billion into a multi-trillion-dollar infrastructure build out
per year.
Yeah.
What about manufacturing?
And the reason for that is because you want the new infrastructure, which increases revenue, drive your cost down.
Right.
That's right.
What about manufacturing?
And he goes deeper in talking about why energy production is going to be so important and why Trump's drill, baby, drill. He actually is a very big fan of that, because if you did not have a president who was super deep on the idea that we need more energy production, you were not going to have any ability for these AI factories that he's talking about to have their momentum. So we'll listen to more about what Jensen said, but it looked like it was a pretty good conference yesterday. You had a lot of industry leaders. You had Lisa Su, you had Jensen, you had a bunch of these people, and you also had Trump for the first time, at least publicly, that we are all seeing, making an acknowledgement of Palantir.
Seneca of Palantir. We buy a lot of things from Palantir. Where are you? Are we getting our bills? I think so. We just made a deal with.
There you go. We buy a lot of things from Palantir. That was pretty cool. that was pretty cool to see. So you had Trump acknowledge Palantir right there. Palantir 153.60 in the pre-markets. All right, this stock is getting a move. LIDAR, LIDR. That is up 250%. Please be careful with this. It is a $22 million company. So it is a massive, massive small cap. I would imagine they just announced something that is getting the stock to move. They engage in the provision of high-performance active LiDAR systems for vehicle autonomy, advanced driver assistance systems, and robotic vision applications. Did they get a partnership with Google or something? There's got to be something that's pumping them up heavy. It's Nvidia. LiDAR is integrated into Nvidia Drive AGX, and they have a new press release discussing now fully integrated into Nvidia's autonomous driving platform. All right, so we saw the same thing happen with, what was the other stock 2 weeks ago that was also autonomous? That was like a self-driving thing that partnered with Nvidia. I'm forgetting the ticker symbol, but that thing, CYN or something, CIYN. That thing pumped 500% in the day, and then it dropped like 80% like 2 days after. So it's one thing you just got to be a little careful of. When Nvidia attaches its name to something, people and traders, algos will get excited, but that does not mean that it has to be sustainable. So there is LiDAR. That's up 274%. In terms of the meme stocks, Open Door up a little bit, losing some of its excitement, but that's up 5%. Kohl's is down 1.7%. DNUT, which was up 40% yesterday, that one is now down 5%. And then what was the other one? GoPro, that one is down 7%. So a lot of these getting some red candles. Now, the newest meme stock is American Eagles Outfitters. That is up 11%. It was up 25% last night. You may be asking, why American Eagle Outfitters? Why is that one getting momentum? Apparently, they just did a brand campaign with Sydney Sweeney. And yeah, as you can see, the stock was almost at $14 overnight yesterday, based on a Wall Street Bets post going viral about how Sydney Sweeney is the bull case. Which, to be honest, bro, I feel like this is a better bull case on a I don't want to call it a meme stock yet, but on a company that I've seen versus Open Door. Like, Sydney Sweeney is a way better bull case than Open Door. Whatever the Open Door bulls are saying, I think Sydney Sweeney is a better bull case for American Eagle than Open Door. Or DNUT or GoPro or any of these other names. Like, Sydney Sweeney is actually like, she's like a superstar. I mean, you get a lot more people buying jeans if you make a deal with her. So is that being a simp? Okay, maybe that's simping a little bit, but still, American Eagle, I don't know if that turns into a full-on meme stock. Maybe it does, but you're out 12.17 right here, up about 12.48% in the pre-markets. Market data, we did get jobless claims, folks, 217 versus 226 expected on weekly jobless claims. That is a beat. Last week was 221,000. Inflation was down last week with the PPI. We had a really good beat on PPI, and we have the labor market holding up. So one could argue, hey, if the labor market's holding up and inflation's coming down, maybe that is the recipe for a really good economy going into the latter half of the year if we end up getting rate cuts. However, one of the analysts that I really respect, Julian Emanuel from Evercore ISI, he's been bullish for the broader, basically, call it 18 months. He's getting a little bearish. Here's what he had to say about the next move for the S&P 500.
Here's the view on Wall Street this morning. FOMO is back. Julian Emanuel of Evercore is pushing back. The next 7 to 15% is down in the S&P 500 at nearly 25 times earnings. Prices have over-discounted continued good news on trade and earnings at a time of year where stocks tend to weaken. Julian joins us now for more. Julian, good morning.
We will play that in a bit, folks. We got Lutnick. He's live. Let's just see what he's saying, and then we'll keep going from there. He's probably talking about trade deals and this Japan trade deal. So we'll check that out in a second.
to build in America the things that Donald Trump wants to build. Power, generic drugs, shipbuilding, whatever Donald Trump wants to build, the Japanese will finance it for him. Pretty amazing.
Mr. Secretary, I thought that was an incredible gift. It had to happen. I am very concerned that if there's no deal with Europe, what they'll do to our service companies. It's the only thing that they ever really take from us anyway. How do we protect these great American companies?
Well, you're right. They attack our great tech companies every day. They have this DST, Digital Services Act, a Digital Markets Act, also another tax on American technology. And so we're trying to beat that back. And in these trade deals, we talk about it. Look, we think it's reasonable that these companies pay fair tax in Europe, but we've got to stop this onslaught of this regulatory onslaught of our tech companies. And Donald Trump's got these tech companies back. And we are working on it. You saw we got rid of it in Canada. We got rid of it in all sorts of countries. They knock it down. That's one of our key objectives.
And let's talk about Korea for a second. I don't know what's going to happen. There's no deal before August 1. But I've got to tell you, they have plants in this country. But when you look at the plants they just assemble, all the IP is from Korea. How do we get them to be serious about the plants that they have here?
Well, what happens is when it comes into the country, you put a tariff on it. So if you bring the engine in, you pay the tariff. If you bring the parts in, you pay a tariff. So if you tariff the parts, you capture the idea, and we're all over that. Now, you know, they're Korean manufacturers. They do produce plenty of cars here, but as you pointed out, they tend to bring a lot of things in from overseas. That'll get caught by these tariffs. And you know, the Koreans also, like the Europeans, they very, very much want to make a deal. And when they saw, I mean, you could hear the expletives out of Korea when they read the Japanese deal. Because the Koreans and the Japanese, they stare at each other. And so you can imagine what they were thinking when they saw that Japan made that deal. They were like, oh, man. And, of course, you're going to be in my office today talking.
Mr. Secretary, you know,
Look, I mean, hopefully we get the South Korea deal. We got the August 1st deadline coming up. I mean, if we could get a South Korea or India deal, that would be a big deal going into that deadline.
comes to the Japan deal, the $550 billion in investment. We were trying to grapple with this a bit yesterday. Do we have specifics around where that's coming from, where it's going, what timelines, what metrics, what they're going to be held to? I'm just trying to understand a bit more around what is obviously a very large number.
So the key is this is not regular foreign investment. This is not Toyota building a plant in America. That's what normally people think about. This is literally the Japanese government itself saying to Donald Trump, we will provide Donald Trump and the American people $550 billion on projects you choose. And we will give you 90% of the profits, America. So basically, Donald Trump can pick the projects, and we are working the details out now. We're doing documentation right now. But here's an example. If Donald Trump says, look, we don't make generic antibiotics in America. We don't make antibiotics. So let's go build those factories. Let's go invest $15 billion, and let's take care of generic antibiotics. And bang, the Japanese will finance it for us. It doesn't cost us money. And those profits, 90% of the profits stay in America. 10% go back to the Japanese.
That part is hard to believe, that 90% of the profits on a $550 billion Japanese investment go to America. Does anyone else find that a little hard to believe, just like Business 101, that if you're putting up the investment, 90% of those profits are not going to be with you? I don't know. It's just hard to believe that that's going to happen.
Pay their cost of funding, and that's it. We don't have any obligation to pay anything other than 90-10 split. So Donald Trump can take care of America.
And they're under an obligation to actually provide that financing. I mean, is there a way you're going to measure it if they're in violation, or I'm just curious over what time period?
It's easy. This is so easy, right, Doc? We give them the project. They pay for the project. They don't pay for the project, their tariff is going to go sky high the next day. They're going to pay for the project. This is easy to execute.
Okay. On something else I wanted to come back on you, which is TikTok. There was some reporting yesterday, but I know you did an interview, but I don't think you talked about TikTok. So I'm curious, because I know that's also under your where are we on that in terms of dealing with the Chinese? and whether or not they're actually going to allow the algorithm to be potentially transferred, and we get a buying group here that takes it out of Chinese control.
Right, it's got to come out of Chinese control, right? We've made the decision. You can't have Chinese control and have something on 100 million American phones. That's just not okay. So if it's in American control, and China can have a little piece, or ByteDance, the current owner, can keep a little piece, but basically Americans will have control, Americans will own the technology, and Americans will control the algorithm. That's something Donald Trump is willing to do. If that deal gets approved then by the Chinese, then that deal will happen. If they don't approve it, then TikTok is going to go dark. And those decisions are coming very soon. So let's see what the Chinese do. They've got to approve it. The deal is over to them right now.
Is it?
I think the only way they approve it again is based on these chips. I mean, I think a lot of things are going to get through the finish line from China. China doesn't want to give up TikTok. They don't want to give up rare earth minerals. The only way is for Nvidia to be the major bargaining chip, which thankfully we have on our side. But that might be what gets them over the edge. All right, folks, we got 2 minutes until this market opens. We had a bunch of earnings this morning as well. American Airlines, I think the most notable. That stock down 7%. American Airlines. I did not look at the numbers. We'll go through them in a bit. But American Airlines right here is down 7%. Southwest Airlines had earnings yesterday. Southwest right here down about 3%. T-Mobile also had earnings yesterday. They crushed. They're up 4%. ServiceNow at earnings. They crushed. They're up 8% yesterday. Or in the pre-markets based on the earnings they had yesterday. And Chipotle had earnings yesterday. They kind of didn't crush. They are down 13%. It's one of the worst days in the past 3 years for Chipotle. So those guys are down. But the big ones we're looking at the bell are Tesla and Google. 50% of you say that Tesla is not going below 215 and below. Could I see below 300 today? Sure. Could I see a rebound back to 320? Sure. It's really going to depend on market sentiment as we get into this. Google right here, I think 200 should happen. Like, I really do think 200 could happen. It would be very weird if we don't see 200. But it's going to be up to the market to decide where these goes. And then UNH getting investigated by the DOJ. That one's down 3%. It was below 283 at one point. We'll see if that can hold or if that one gets dumped as the market opens. Robin is up about 1%. Palantir is down about 0.5%. Nvidia is up almost 1% pre-markets. Google and Tesla. Those are the main ones that we are looking at. All right, folks, here we go. We are officially in earnings season. We get to do this 4 times a year and see our net worths go up or down. But that is the privilege that we have as investors that have the ability to invest and hopefully change our lives for the better when it comes to hopefully being in some of the most amazing companies that exist. Thursday, July 24th, 9:30 a.m., the stock market is now open. All right, wake your ass up. Let's get into it. Google opens up 4%. Tessie opens down 8%. She's bleeding 307. Let's see if she breaks 307, but she is down. Google not breaking 200 yet, but it looks like it wants to break 198, 197.55. American Airlines down 8%. Bitmine's up 2%. Robinhood's up 0.34%. Palantir's down 0.34. Google 197.50. Tessie 308.40. Tessie 308.40. She is down about 7%. Grab down about 0.2%. AMD is green 159. Rocket Lab 49. That is green. GoPro down 6. DNUT down 3. Opendoor up 5. Ethereum 3600. Big Bear AI, that one is also down about 0.5%. S&P 500 looks like it is flat 0.09. Could go green or could go red, but barely holding green. 634. We did hit an all-time high yesterday, and I think we're kind of at an all-time high right here. 634.56. We hit 634.20 yesterday. So that one is still holding up. Enphase right here, that is up about 1%. T-Mobile's up 5.3. ServiceNow up 9%. ServiceNow having an incredible run right here. Now, ServiceNow technically is getting back to where it was in a couple of weeks ago because it did have a bit of a dip from July 3rd. So it is making a little bit of a rebound, but it is nice to see that one up 9%. Robinhood goes red. Palantir goes red. American Airlines still down about 9%. Broadcom almost at all-time highs, 289. Nvidia up a little bit. Tessie 305. Wow. 305. 304. All right. I mean, at this point, below 300. I mean, it's like $4 away. 980 billion market cap, just fell below $1 trillion. Google is also losing some of its pump, 195. So it got to 198. Then you got that big red candle right there. Not really able to hold up. Let's see if it actually gets there. SoFi, 2184. SoFi trying to get back to 22. SoFi trying to get back to 22. LiDAR, that got halted. This company now partnered with Nvidia. So that stock was up 319%, 474. That got halted. Where is Opendoor? Opendoor is down about 7%. Tesla puts are printing. That is correct. Tesla puts and Tesla covered calls are indeed printing. Does the street take her below 300? 302.90. Last time it was below 300 was when Elon was tweeting about the America Party. Let's see if it gets back. Let's see if it gets back. Grab right here, 537. Nvidia's green based on everything Trump said yesterday, along with what Google said about raising their capex. Google not getting in the move. I mean, you would think this one just blasts through 200. Even Gene Munster, who's like the biggest Google hater, said yesterday, you can't hate on these earnings. Like, you know, he got on CBC and he literally said this was a fantastic quarter and Google should be higher. And it's right. It should be higher. But volume's not coming in to take it that much higher. 196.72, still up 3%. So you can't be mad if you're a shareholder, but not cracking 200 yet. I do think it's an inevitability. It's a when, not if question on when it does. HIMS right here, 56.69. That was up 17% yesterday. HIMS might be the new Wall Street Bets name. It's 40% short. Wall Street Bets loves these short tickers. There's actually a real company behind him. So that might be an argument for why that one gets taken higher. SoFi almost back to 22, 21.95. We did touch 22 for a little bit. Let's see if it can get back there at 22. Robinhood 101.99. Salesforce 267. AMD 158. IBM 258. That's down 8%. IBM beat on the top and the bottom. Guidance was a little weak, and it looks like that's why IBM is taking a bit of a hit. S&P 500 is about to go red, but it's still holding on to some of its green. Cheesecake Factory, that's down 2%. Enphase is up 0.5%. Circle down 2.4%. Rocket Mortgage, this was kind of turning into a meme stock over the past couple of days. That's down about 4%. SoundHound is up a little bit. D-Wave is down about 3%. GE Veranova, they had great earnings. That's down 0.5%. Oscar going the opposite direction of United, even though that is down 2%. That did crack 15, 16 in the pre-markets. UNH, that stock is down 2.4. Down 2.4. Amazon, 230. Amazon, 230. So Jeff Bezos, apparently the New York Post reported yesterday, is trying to buy CNBC. Which means if you're an Amazon shareholder, you should love this because every analyst that goes on CNBC will pump Amazon. So, I mean, if you own Amazon, yeah, let him buy CNBC. Let's get the pump on Amazon going 24/7. NEO, where is NEO? NEO right here is down 2%. PayPal, which introduced their new PayPal World ecosystem yesterday, that's up about 1.6. And then Tessie, I mean, it looks like she wants to see 300. She bounced off 301, so they're not letting her go below 300 yet, but it looks like that one's ready to get hit. Looks like that is ready to get hit. New York Stock Exchange margin debt soared 18.5% in the 2 months ended June 30th. U.S. households and investors have utilized leverage to buy, the fastest rate of investor re-leveraging to buy stocks since late 1999. Wow. So U.S. households have the fastest rate of borrowing money, aka margin, since 1999. I mean, leverage can definitely create outsized gains. It can also create outsized pain. But it does look like people are leveraging up. PayPal right here, 77.60. ServiceNow up 7.5%. T-Mobile up 6.7%. Robinhood goes green. Palantir trying to go green. Nvidia, wow, 173. All right, so again, the beneficiary of Tesla, Google earnings is Nvidia. It's not Tesla, and it's really not even Google. it's Nvidia. Trump tweeted about Tesla. Oh, boy, what did he say? Oh, boy. What did he say? Did he say the stock? Okay, Trump says, everyone is stating that I will destroy Elon's companies by taking away some, if not all, of the large-scale subsidies he receives from the U.S. government. This is not so. I want Elon and all businesses within our country to thrive. In fact, thrive like never before. The better they do, the better the USA does, and that's good for all of us. We are setting records every day, and I want to keep it that way. Okay, so Trump's kind of playing the nice guy here. He's not dancing on the grave of Tesla this morning, which is nice to see. Wonder why he tweeted that, though. Why do you think he tweeted that? Do you think he's stocks down almost 10% and Trump comes out with a relatively positive tweet about Tesla? Well, about Elon. Huh. I don't know. Feels like there's something interesting going on there. You think he randomly woke up 4 minutes after the market opened and said, hey, I want to tweet something good about Elon? We know he watches the news. We know he's very calculated. Maybe there's something else. Because Elon was sad on the call. Elon did sound kind of sad, or he just sounded kind of bored, dude. He sounded like someone who's been explaining his Tesla long-term thesis for like a billion years, and he's just like, guys, do I really have to explain this again? It's autonomy. Like, if you don't like it, don't buy the stock. If you do like it, then you'll believe in the future. That's the vibe I got. Which, I mean, quite frankly, like, yeah, like that is the truth. It's just obviously for shareholders, it's not the most exciting call to listen to. Tesla right there, 303. 303 on Tesla. I think one of the reasons Trump tweeted this as well is because there are some rumors going around that SpaceX is going to lose some contracts because of whatever beef Trump and Elon has. First of all, we don't even know if that's possible because like SpaceX is very vital. So for them to just lose the contract and for them to go to someone else, it's just not that easy to do. Second of all, I think Trump's trying to put out there, hey, I'm not trying to take away Elon's contract because I don't like him. I want everyone to do well. And if he does lose a contract, it's not because I don't like him. It's because of any other type of reason that's out there. American Airlines down about 8%. Hoodie up a little bit. Palantir trying to go green. It's almost down 1%. And then Nvidia trying to crack 174. Nvidia's all-time high, 174.25. We are very close. We're $1 away. So maybe there's a shot she gets there. Tessie, I mean, she's not going below 300 yet, but she's not reversing either right now. Covered calls up 98%. Yeah, there you go. There you go. Let me check my covered calls on Tesla. They should be up pretty nicely. Yep, we're up 70%. We're up 70%. Again, I mean, for a stock to do covered calls on, you need volatility. You need the people that are willing to pay these extraordinary prices on these call options that are probably not going to happen, but they like to gamble. And then you need the stock to be range bound. One of the problems with Palantir, Nvidia, and Hood is that covered calls were working for like the first 5 months of the year, and then they went parabolic. And so you can't really do covered calls on a stock that's parabolic if you want to keep the name, because if you want to keep your shares, because then, you know, it'll blow through your strike prices. On a Tesla, you have all the hopium that it's going to go to the moon, but then you have none of the price performance going to the moon. And then you take a benefit of the spread and get to acquire shares by reducing your cost basis and using that premium to then reinvest and hopefully build out a position for the long term, which is kind of my thesis right here on Tessie. 303.57, that's down 8%. Also on Optimus, Elon didn't really give us any good news. Elon said until 2030, you're likely not going to see massive production, which is kind of extended from the timeline of 2027. So who knows if it's even going to happen in 2030. So any updates on Optimus that would be like super bullish? Yeah, there was none. There was none that was going to be super, super like, hey, Optimus is like the reason you buy right here. It's like, no, dude. I mean, you could buy because of Optimus for the long term, but you're not going to get a pump, it seems like, in the next year and a half off some major Optimus headline. Maybe. But that's not exactly what Elon hinted at yesterday. AMD, is that one green? Coinbase 394. AMD, Lisa Su, there is an interview with her that we'll watch in a second. AMD 160. Back to 160.75 on AMD. Yes, I sold covered calls on Tesla like before earnings, which is why they're up 70%. I'll probably roll them down. I had a 370 strike. I can probably roll them down to like 340-ish. But yeah, that's great. Give us a covered call example on Tesla. If you had 1,000 shares, what would you do? So it depends on your cost basis, but if you had 1,000 shares and you didn't want to lose all 1,000 shares, you could do 50 of them at a certain price, and then you could leave the other 50, or 50 of them at a different price. So you could do like a $400 covered call before earnings yesterday for 50 for 5 of your contracts. And then you could do something more aggressive, like a 350. So you're kind of balancing it. Or you could do all of them at 400, right? If you're really worried that Tesla's going to moon. Or you can do all of them at 350 if you're really aggressive and you don't think Tesla's going to get to 350. So I think if you have 1,000 shares or 2,000 shares, it's a question of figuring out how many shares would you be okay with being called away? And then realistically, you know, if they actually do get to that level, do you think Tesla's going to be able to hold 350, 370 if it pumps? Probably not, because it's all based on hype. And so then you just roll them, wait for it to come down, and then you close the position once it goes below your strike. But if you do have a lot of shares, I do think it's a way to generate some income. SoFi right here, 2173. Open Door getting a move, 12%. Open Door's up. Where's American Eagle? Sydney Sweeney, did that continue to pump it? American Eagle is up 9%. You got the Sydney Sweeney 9% pump, which is not too bad. Open Door calls are pouring in. Open Door has been the top traded stock in the options market for the past 3 days. For the past 3 days. So actually it was number 2 yesterday, but the 2 days before that it was number 1. So yesterday Nvidia was number 1, Open Door was number 2. But pretty incredible. up 13%. I mean, I don't think there's any real thesis to it, but maybe the bulls continue to believe there is, and the options market is definitely trading it as there is. So maybe it revisits that $5 high that it got to 2 days ago. T-Mobile right here up 7%. That's really nice. T-Mobile doesn't make moves like that. That's big on T-Mobile. ServiceNow right here up 5%. Robinhood is green. Google just being disrespected again. I mean, 194 is ridiculous. Absolutely ridiculous, dude. This thing should be much higher, but Google, 15 million shares. Tesla volume is 29 million shares. Tesla getting 305, bouncing from 301, but holding at 305. Hims, this stock down 2%, giving back some of that 17% pump yesterday. Not too crazy to see. Apple's a little green. VRT, Constellation, those are green. Faraday Future is up a little bit. Microsoft 507. Nothing crazy. I mean, Amazon breaking 230 is nice to see. It's funny that Amazon's going up, even though Google had earnings. I guess AWS growth is what the street's excited about, given GCP crushed it on cloud. But Google themselves not really getting the benefit from that earnings. Palantir now 152.86. Palantir does have earnings on August 4th. Broadcom 288, and then Nvidia 172.98. Yeah, a little bit of a quiet day on some of these bigger names outside of Tesla. Oscar right here is above 15. It was at 12 2 days ago. That's down 1.5. UNH with that DOJ investigation, that one is barely down. It's down 2%. Nothing crazy there. Crypto names all pretty much red today. Bitcoin is slightly green. CleanSpark's down. Coinbase is down. MicroStrategy down. Marathon down. Hut 8 Mining down. Bitfarms down. So you got a lot of the crypto names not really doing too much. And then semis are all green except TSM, Qualcomm, ON, and Intel. The rest of them are green. Oklo got a new contract. Oklo, is that green? Oklo, wow. Dude, Oklo pumped 10% yesterday. And now it's pumping another 5%. It pumped yesterday because of Trump talking about nuclear energy. And it looks like they got a contract today. I'll pull that up in a second, which is also helping them out. Yeah, there you go. Oklo, there's that momentum. 7% up or almost 5% up on the day based on some of these new energy contracts. Tesla right here, 304.95, and then Hims 56.87. Google still getting disrespected. SoFi 21.70, cracked 22 for a second, could not stay up there. BMNR, they bought another billion of Ethereum. That stock up 1%. Up 1%. AMD, is she breaking out? AMD 161. 161. The high she got to was 162. Wow. So AMD is very close to breaking 52-week highs right here. AMD moving with Nvidia. Bloom is pumping. Okay, BE, that company that got a big energy deal today, that's up 20%. $7 billion market cap. Is LiDAR still halted? LiDAR is, nope, 235%. Unhalted, down from 470 to 380, but it is still up 230%. Still up 230%. By the way, we did the Ethereum deep dive yesterday. We're doing a MicroStrategy deep dive today. 9 p.m. MicroStrategy with Jeff Walton. We will be going deeper into why people care about Saylor's thesis on MicroStrategy. 407, that one's down about 1.3. MicroStrategy was at 450 a week ago. So this one has got hit. Obviously, Saylor has issued more shares to buy more Bitcoin, even though Bitcoin's price has not really meaningfully gone down, which is why MSTR's price has gone down. But if you're an MSTR shareholder, you believe that that is the right way to approach this. Opendoor right here, up about 14%. American Eagle up 10%. Hoodie, flat. Grab, flat. And then Google up 2%. Tesla right here is still down 8%. Tesla's down 8%. I just sold MicroStrategy after watching the Ethereum deep dive. One thing the Ethereum deep dive will leave you feeling is that Bitcoin is useless, which I think is objectively true. But that doesn't mean the store of value of Bitcoin is useless, because obviously if the asset goes up, it is storing your value, right? But in terms of the utility, I mean, like, yeah, you can't really do much on Bitcoin. But it's finite, and it is, you know, something that has a supply-demand imbalance. It is a hedge against monetary printing. So there's all these different ways to justify it. But Ethereum's ecosystem is why I think Tom Lee's very practical. He sees the use case and he's like, okay, could this use case scale? Okay, if it can scale, will the price go up as a result of that? All right, cool. We're buying it. It's a pretty logical argument that he's having on this. It's just a question of if the economics of the treasury companies are valuable to invest in. And that is what is going to take over time. The problem is the too many people on Ethereum hate Bitcoin, and too many people on Bitcoin side hate Ethereum. And I'm like, I don't have any opinion one way. It's like they're both cool assets. Like, I don't know why there has to be such beef between the communities, but you definitely do have people that are not fans of each other in that arena. All right, we have PMI, folks. S&P PMI expected 52.9. We got 54.6. 52.9. We got 54.6. And then manufacturing expected 52. We got 49.5. Services expected 52.9. We got 55.2. That's a beat on services, manufacturing, and global PMI. That seems rather bullish. That is not horrible. You got pretty good PMI beats across the board. Economic activity is not slowing down. By the way, the ECB is likely holding rates steady today. So they're not going to be cutting for the 10th time in a row. If they do, I think Trump would really get mad that Jay Powell's not cutting. But it looks like they're holding rates steady today. And Jay Powell will get his opportunity to tell us what he's doing next week as well. Wow, Amazon 232. So we got good PMI. That might be helping Amazon. Amazon is one of the main companies that is rooted in people buying and selling things. Amazon right here, 232. That's up 2%. What about the S&P? Can we get 635? Wow, 635. All-time highs, baby. 635. 635. Okay, not that bad. Open Door, she's moving up 270 as well. That's up 17%. S&P, I mean, in the face of Tesla falling 8% and Google barely moving, the S&P goes higher. The S&P goes higher. Where is Tessie? Tessie 305. That's down 8% on Tessie. SBET, is that pumping? SBET is pumping. BMNR is not. SBET up 4%. BMNR isn't. Yeah, I'm also confused how the treasuries are moving, because you think they should be moving together. I know they have different MNAVs and all that stuff, but sometimes one is down 10%, one is up 10%. It's just kind of weird. And I feel like the market's still trying to figure out, all right, how do we like algorithmically understand these treasuries? Because a lot of times the algos control them. But also, what is the long-term thesis on them? And what news affects them going up or down? Like if Ethereum's price goes down, does that really affect them? And if they buy more Ethereum, should that really take them higher? And then how do you factor in the risk of dilution? Because again, both these companies, SBET and BMNR, can dump shares to the tune of a couple $2 billion whenever they want if the price gets too high, kind of like Saylor can issue an at the M whenever he wants. And you know, that is also a risk that I think a lot of people have to think about when investing in these companies. Open Door right here up 16, Amazon 233. Dude, Bezos sold like another $150 million worth of shares yesterday. So the fact that it's still moving right here, AMD getting very close to 162. Very close, 160, 162, up almost 1.7% right here. Amit, are you buying Hood at these levels? I did buy Hood at these levels last week. I'm currently not adding to Hood just because at some point, like one of the reasons I could have bought more Hood instead of Tesla, but at some point you have to diversify, right? So like my Hood position is complete, dude. I'm good. I really don't need, unless we get a stupid dip. I don't need to be adding more at these levels. So I'm in. Is adding here, does it make sense? I think long-term, yeah. But like if we get a crappy quarter, if we get a crappy August, then who knows? You know, obviously we're probably going to see some weakness and that could create some pain. Speaking of a crappy August, again, this is one of my favorite analysts and he's turning a little bearish. Here's his take on why August, September might not be the best.
Morning.
Good morning.
That deal, does it change anything?
Well, so here's the psychology. It's interesting. Of course, we know that markets prefer certainty. That's an almost, given. But I think there's been this psychological benchmarking around the 20% that people associate with Smoot-Hawley, right? So something comes in well below that 20% number and markets think, okay, we can live with this. But again, I think, and we were talking about this earlier, is that part of it is that for a variety of reasons, we have yet to see the actual effect of tariffs. Particularly in the inflation numbers really just starting to feed at some of the sub indices, and we still think that's ahead. And so sort of putting that all together at this valuation, which is the highest basically outside of the .com boom and bust, we think actually a pullback would be healthy.
Raises.
And again, he's been bullish for the past 18 months. So he's saying, hey, at 25 times earnings, given the impacts of the tariffs are not really known yet in earnings, we think S&P next move is probably 7% down.
The question, just how high is the bar in the second half of this year? Because we hear a lot of people talking about a second half rebound, and never mind a second half rebound. They're looking out to 2026 and beyond, looking for earnings to accelerate from there.
Well, and there's certainly a case for earnings accelerating, but right now, when you look at bottoms up consensus projecting a 13% increase in 2026, those are the kinds of numbers that you tend to see coming out of real economic trough type conditions, which clearly we don't have. And from our point of view, there is an informative lesson going on the last couple of weeks, and we think, which is why today's earnings begin to be important, is that the price reactions are very mixed. Essentially, there's an element of good news being in the price on an individual stock basis.
I don't fully agree, dude. I don't fully agree with his take right here. Again, to agree with his take that the S&P 500 is next move is 7% down, S&P 635 right here, you have to believe that the tariffs are so bad that when we see the results in the rest of these earnings, by the way, we've already had 20% of companies report earnings. 80% of them have beat on EPS. So we've had some pretty good results so far, even if the prices have not reflected those earnings beats, which is actually good because if the prices stay flat and the earnings beat, that means the multiples on all these stocks go down, which make them more attractive going into the future and allow them to grow into the valuation. So it's not that big of a deal that the prices are not reflecting the earnings beats, especially because prices on stocks in general have been up so much since the April lows. But to assume that the tariffs are going to be so unbelievably horrible that it will result in 5,800 on the S&P from here would also be ignoring, in my opinion, the fact that so many money managers are under allocated to the markets, and that if we even see 620 on the S&P, you're going to get people buying the dip. If we see 615, you're going to get people buying the dip. If we see 600, you're going to get people buying the dip. What I'm trying to say is I think dips are going to get bought before you get some massive move to the downside, unless there is some big macro reason. And I just don't think we see that macro reason yet. Tesla trying to recover right here, still down 7% of the day. It looked like 301 was the intraday bottom. 307.36 is what we got on Tesla. 307.36 is what we got on Tesla. Intel does have earnings next week. That stock is down about 2.2%. Intel, very range bound as well, kind of been stuck from 20 to 24 for the majority of the year. Chipotle, wow, 12% down. When's the last time you guys ate at Chipotle? It's been a minute for me. I've not ate there in a while. Uber's up 4%. All right, this makes sense. When Tesla goes down, Uber goes up. So Uber getting some love. What about Lyft? Lyft right here is also up about 1%. Lyft is also up 1%. Is Intel earnings today? Is it today? Oh yeah, it is today. Sorry, my mistake. Intel's today. Intel and Coca-Cola are today. All right, so those two we'll be looking at today after the bell. Going there tonight. I eat there every week, every day. Oh, okay. Well, I guess people aren't spending enough at this restaurant, dude. 12% down. I mean, they did reduce guidance. They beat on top and bottom, but their guidance was just not pretty. Same store sales were also down about 4%, not 4%, almost 14% year over year. So that also, I think, is what's getting the street a little upset. S&P 634, Open Door losing some of its pump. Amazon 233. I think maybe Bezos buying CNBC is kind of bullish for Amazon. I mean, I think realistically it's pumping on AWS momentum based on Google earnings, but who knows, dude? If Bezos, how much is CNBC worth? Let's ask Gemini. How much is CNBC as a network worth? It's got to be a couple billion, right? I think it's got to be a couple billion, maybe less than that. Okay, so NBC Universal was at 32 billion. CNBC, okay, Google says 3.9 billion. 3.9 billion is what Gemini says. I mean, Bezos, he can afford 3.9 billion. Google, wow, dude, 193. She's really losing. It's like it's up 1.7%, but it was almost at 198 when the market opened. It's losing a lot of that pump. A lot of that pump. That's pretty incredible, dude. That's pretty good. Those were not earnings to be upset about. They were just not earnings to be upset about. 85 billion on CapEx maybe is the reason why the street's upset, because they're spending another 10 billion and that's going to hurt their margins. But if Zucks is spending as much as he's spending on talent, you can't be mad at Google for spending more on CapEx. And also, Google's showing an ROI on that CapEx. So the idea that you would, as an investor, be upset that they're spending more when they're building out so many different things across YouTube and search and Google Ultra and cloud, et cetera, that are AI native is ridiculous. Like, no investor should be upset about that, especially because you're already seeing the results of that ROI. So if that's the reason, that would be weird. T-Mobile right here is still up 7%, and then ServiceNow is up 5.4% as well. The dude who bought 20 million in 829 210 calls is down to 20%. Yeah. Now maybe he was doing it as a hedge, but like maybe he was selling those calls. But if he bought those calls, obviously you're not getting that outsized move on Google to see some of this momentum. All right, Google right there, down, up about 2%. ServiceNow is up 5%. Lane says, I don't watch CMC, only AK Media. Dude, if Jeff Bezos tried to buy out AK Media, I mean, let's just say it would be a very prime deal for him to engage in. S&P 634.97, Amazon almost 234, folks. No, it broke 234. It broke 234. Wow. What is the street so excited about on Amazon that they're not excited about Google? Like, how are they this excited about Amazon but not Google? I mean, that is incredible. Unless it's that Bezos CNBC headline, which realistically I do not think that's what's pumping it. I mean, that's incredible. That is incredible. 234 on Amazon. Now, today's going to be very important. And from a macro perspective, Trump is visiting Mr. Jerome Powell, and he's going to be seeing him face to face, I think, for the first time in a couple of years. One fun fact about this: in 1965, President Johnson shoved Fed Chair Martin against a wall during a heated conversation, not at the Fed building, but at a ranch that Johnson owned. In 1965, after the Fed raised interest rates due to concerns about financing the Vietnam War. So that was the last time we saw a physical altercation between the president of the United States and the Fed chair. I don't think Trump will be physical today with the Fed chair, with Powell. But regardless, I mean, you are going to see, you know, potentially some level of argument or confrontation with Jay Powell. I don't think it's going to be on video, but I mean, it is going to be one of those things that the media is going to try to figure out what went on in that meeting, and maybe he does get a chance to switch Jay Powell's mind. Now, speaking of switching Jay Powell's mind, Besant has been trying for the past couple of weeks, but he's been unsuccessful. Here's what Besant had to say about Powell yesterday.
Something called the Summary of Economic Projections, and it's pretty politically biased. But we're seeing that we could see 1-2 rate cuts this year, and I think that once we see over the next 1-2 months that the tariffs haven't been inflationary, and I have breakfast with Chair Powell almost every week, and I just keep saying that a one-time price level increase is very different than the notion of a persistent inflationary spiral. Right. I think that we used to say TDS was Trump derangement syndrome. I now say TDS is tariff derangement syndrome.
Right.
And when you think about it, the market crashed, then it had the fastest recovery in history over a 54-day period. We're back at a new high. So I think the market is looking through all this to next year with the productivity boom. And
So two things. Number one, the reason the market rebounded that easily is not because they looked past, is because you guys paused the tariffs. That's the one thing the administration always conveniently doesn't seem to mention when they say the market had the fastest rebound in history. They delayed all the tariffs, which to the market was like, oh, 3-month delay. You guys aren't serious about this. You're getting rid of the tariffs. All right, we're going to go buy the markets again. So no, the market did not look past the tariffs. You guys got rid of all the tariffs, and the market then said, okay, so we don't have to worry about this, and we moved forward. So yeah, it was a taco that caused the recovery. Now, again, the markets are okay with 10 to 15% tariffs. The market was just not okay with the 50, 70% reciprocal tariffs. And once they got rid of that, that's where we saw the rebound. Number two, if Besant's having breakfast with Powell every week, as he said, you know, Besant literally saying, hey, I meet the guy every week and I keep trying to tell him 25 basis points is not that big of a deal. and Powell's still not cutting, then I don't think Trump's going to be able to say anything today that's going to convince him otherwise. I mean, if Powell is still not ready to cut after a weekly breakfast around Besant explaining to him why 25 basis points would not hurt the economy, then we're not getting the cut in July. Hopefully we get it in September, but I don't think Trump's meeting today is going to make any difference if Besant's not been able to do the sweet talking over the past couple of weeks. So we'll see later in the day what reports end up coming out from that meeting, but ultimately that is going to be something to watch out for when it comes to rate cut probabilities. PayPal right here up about 2.3%. SoFi losing its pump as well. T-Mobile holding 6, and then Tessie 306. Tessie down 7%. Didn't go below 300, but still down 7%. New home sales, are we getting that? I think we are getting it right now. Let's see. We are getting new home sales. Let's pull that up right here.
Seasonally adjusted annualized units comes in on the light side, no surprise, 627,000, but it is from a 623,000, so it is up just a smidge, somewhere around 0.5%. But here's the deal. Last month, 623,000 was the lowest in 7 months, going to October last year. This is barely above that. It still comps to that. The previous month was a much more robust 722,000. So we have back-to-back weak months, and we know the story. Journal talks about how the spring shopping season was very weak. We're seeing inventory still building on a number of fronts with regard to new homes. And on the existing, well, we see that there's weakness there. Rates remain persistently high, and even if the Fed lowers, there's no guarantees what the 10-year is going to do. But I will say, if you look at the 2s10 spread, it's been hovering around 50 basis points, not much wiggle in the curve. That's because of the Fed meeting next week. Sarah, back to you.
Okay, thank you, Rick Santelli. Well, we are knee-deep in earnings season, which means that I've been scouring through the reports and so of our great producers for what we're hearing about the consumer and what we're hearing about overall economic demand, because companies have the best read right now. The 1 weak spot, I would say, on the consumer came from Chipotle, and you can see that in the stock. The company lowered guidance for the year for the second time this year. Stock's getting beat up. Here's what the CEO said about why.
I think much of what we're experiencing right now is due to macro, and the consumer, the low-income consumer is looking for value as a price point at present. You have to look no further than what's going on with our competitors with, snack occasion or $5 meals or.
Wow. So Chipotle CEO saying it's the consumer. He's putting the responsibility on a weak consumer. This is one of the first earnings where we've actually heard the consumer is weak, and that's also probably why the stock is down 12%.
And that's where the consumer is drifting towards as value as a price point because of low consumer sentiment. I think as sentiment improves, the business will improve. And so that, I think that's probably the biggest headwind we face.
A lot of commentary about the low-income consumer in particular being under pressure. The other commentary on the consumer that was not as positive came from American Airlines, which didn't have as bullish of an outlook as Delta or United recently. They did talk about consumer caution. Robert Isom, July, in the interview with CNBC, July's been a tough month because of domestic consumer weakness, although I will say, he said premium demand and spending from higher income consumers remains resilient. So those are
Now, Delta said the opposite. So these issues could be isolated or insulated to American Airlines and Chipotle, aka people don't want to eat at Chipotle and people don't want to fly with American. It doesn't have to be indicative of the state of the consumer. We're going to need a lot more earnings to confirm that. But these CEOs are definitely blaming the consumer as the reason for why they missed earnings. So the question is just if that's a trend going into the rest of Q2.
Kind of the downers, guys, that we got lately on the consumer, but there was plenty of positive commentary to go around, especially from some of the industrials. We just put a few of them together. Dow, for instance, the chemical company, demand remained steady. Honeywell CFO, business demand has remained resilient in most sectors. Union Pacific, railroad company, current volume surge after some of the uncertainty has been lifted on tariffs. So I would say actually overall, mostly positive, but some flags, especially around low-income consumer.
I mean, certainly the price action in a lot of those names doesn't reflect the commentary.
No, but the comment, I was picking out some of the macro commentary. I mean, Dow basically had its first quarterly loss in 5 years. There's trade and tariff uncertainties there.
Cut.
Yeah, but what they're saying about demand is not like things are weakening, things are not resilient. I mean, those were some of the commentary I picked out. Honeywell did raise guidance for the second time this year, and it was better, but a lot of it has to do with the setup too into earnings.
Honeywell obviously also splitting into its parts.
Yes.
That will take some time, but obviously important for investors to remember that as well.
Yeah. I mean, Keurig, have you seen Keurig Dr. Pepper? This has been a stock. Very, I guess, energy drinks, hot energy and caffeine drinks. You know, they make Ghost, they make C4, energy, electrolyte hydration. While coffee's not doing too well, it's been actually a strong run. And the commentary here, broad-based momentum, which was a little bit different than what we got out of Nestle, for instance. Overnight, Tractor Supply, another consumer company, said they're encouraged by the momentum carrying into the quarter. So while we might not see it in all the share prices, we are hearing mostly a positive tone, and I would just pair that with what we got on initial jobless claims today, 217,000, a drop from last week and the lowest since April.
6 straight weeks. We haven't had 6 straight weeks of declining jobless claims since the third quarter of 22, even though.
Which is bullish. That is really bullish. I mean, you get declining jobless claims and you get inflation coming down. That's a great economy. Now, obviously, it's super nuanced because there's a lot of other data points you can point to, but you got inflation coming down and people not losing their jobs at the rate that you would need to have a recession. That's not horrible, along with earnings growth being robust, even though some of these companies have not put up the best numbers. Robinhood right here down about 0.5%. Google, wow. Google's $2 away from losing everything today. If Google goes red, there is an issue with this narrative, or maybe people are just on vacation early and they forgot to look at Google earnings. I don't know. That would be weird. What is a stupid dip for you on Hood? Really stupid would be 70. I think overall stupid would be 80. Like 80, I would buy that dip. 70, I would really buy the dip. But yeah, to me, if it were to collapse back down to 80, you would have some macro issues because the earnings are not going to get it back down to 80. It's going to be something in the macro. So if we do see that Hood $80 collapse, almost a 20% decline from here, I think we would see some weakness in other parts of the market as well. UNH right here, almost recovering green, 1.2%, not that bad. And you have Tesla that's still kind of holding up right here at 307. But obviously still pretty red. How high can Hood go realistically? I think 120 by the end of the year is possible, but obviously a lot of things have to go right. We have to have good macro. So, and we also got to get S&P, and I have no faith anymore in the S&P committee. By the way, speaking of S&P, XYZ block, they're at 79.62. I saw a stat yesterday. The buying pressure that they're going to have as per getting into the S&P 500 is massive. I mean, they are going to see $11 billion of buying pressure just on the rebalance day to get into the S&P 500. It's pretty incredible, dude. As soon as you get into the S&P, immediately you have trillions of dollars of assets and asset managers that now need to allocate to your stock. And that is why getting into the S&P is so important. So hopefully we get in, but I just have no faith anymore. But again, I will once again say the problem with the stock running up so crazy is that when it comes down, people are like, what's going on? It's like nothing's going on. Robinhood was at $29 3 months ago. Now it's at $100. Okay, it's not at 110. If you're going to complain, I mean, I don't know what to tell you. Like that's a personal problem. You can complain all you want, but that is not, you can't blame anyone. So it's one of those things where you can't blame Vlad. You can't blame the market. It's like, no, dude, like it's 3X. It's taking a breather. That's okay. It's just not that big of a deal. ABCL, is that moving or is that down? ABCL, that one is up 5%. All right, so that one's still holding 5%. Where is Open Door? Open Door, that one's still holding 15%. IBM, I still don't get what was so bad about IBM, dude. Down 9% feels a little aggressive. It's recovering from 252 now to 256. I'll try to pull up their numbers and see exactly what the street might not be happy about. That has had a monster recovery, though, over the past 18 months as well. Bank of America says many banks are preparing to introduce crypto stablecoins. Yeah, bullish Ethereum. I mean, bullish Ethereum. A lot of the, dude, if you guys watch the ETH deep dive from yesterday, like it just makes sense. Like it really just makes sense why stablecoins are getting. And now I kind of get why Circle is valued the way it's valued. It's not because of the revenue, or the EPS. It's because their moat as a stablecoin provider is only going to get deeper and deeper over the next decade. And the market is pulling forward that growth because they believe in that being a literal new financial system that's being built in front of our eyes. And so that's why Visa had that dip. Now, I don't think Visa deserves to be down 20% because of Circle, but Visa's probably going to embrace stablecoins in some way. But it just does mean, it also means that, hey, stablecoins are not going anywhere. And if Circle is the way to get exposure to it, then that's something no one can ignore. Let me check the stock draft. Today is probably going to be an ugly day for my portfolio. So let's pull it up right here. It should be good for Tanner because ServiceNow is green. So let's pull that up and see some of the prices we've got going on. Is Google going red? Google. Wow, bro. 191. I mean, I don't want to say it's going to go red, but it's $1 away from going red. All right, Matt's up 22%. Tanner's up 10. I'm up 7. Steve's up 1.9. Kris is now positive, up 0.3. Kris is positive. So Tesla's hurting me down 7, and then Duolingo's hurting me down 24. Everything else is green. Steve is recovering really nicely from HIMS. It was down 20, now it's down 6. Micron's hurting him down 7. Netflix and Crowd are also hurting him a little bit. Tanner, the only things that are red for him are Mercado Libre and AppLovin, and actually ASML is hitting him. Everything else is going very well. And then Kris, main negative one is Axon, UNH, Novo, and Take-Two, and Elf. And the rest are doing all right. So that's what we got on the ETFs. Block 79, Uber 93. Wow, Google. 92 cents away from going red, folks. 92 cents away from going red. Who bought Google? Who's buying it? Put in the chat. Is anyone buying this dip? Or it's not really a dip, but anyone buying this non-performing stock after those monster earnings? 191.07. Dude, they're really taking Google down. They're really taking it down. If I'm Sundar, bro, I'm just looking at. If I was Sundar, I would tell my assistant to cancel all my meetings, and I would just be staring at this stock in disgust, looking at it, and being like, "What do they not get?" Sundar even tweeted about the earnings. He doesn't even tweet, bro. He barely tweets. He put out a big ass thread. Even Elon responded saying congrats about all the updates they had. And still, the street's like, nope, we don't care. Bigger question is who is selling Google? I want to understand the psyche. I agree. I would love to understand the psyche. EU approves plan to target 93 billion euros in U.S. goods with potential tariffs if trade talks break down. Okay, so this is similar to the headline we got yesterday of 117 billion in tariffs that the EU is thinking of imposing. Now, the Financial Times reported yesterday that the U.S. and Europe are very close to a 15% flat tariff deal. Peter Navarro went on Bloomberg yesterday and he said, basically, don't believe everything you hear in the media. So he kind of essentially said that's not exactly the deal that we're going for. He didn't confirm it, didn't deny it, but I think we will get close to a deal if we're getting all these headlines that are breaking. The question is just when, and hopefully before August 1st. Maybe the street doesn't like the increased capex. Yeah, that could be one of the reasons. But again, I just don't think that's a good enough reason to sell off Google. Tesla right here, 304. So that's losing 306. And it's back down. Amit, I love having you play by play as I trade every morning. Thank you. Boda, thank you for being here. Appreciate you being part of the show. Appreciate the people that joined the market close yesterday. It was a big day for Tesla and Google. And again, it's always fun to cover earnings. Oh, thank you for the $100 super chat in Sailor We Trust. I think you've sent this like 5 times over the past 2 weeks. So thank you for the $100 super chat. And yes, in Sailor We Trust. I am exposed to MicroStrategy via Misty, which was doing really good. It was at almost $23 last week, and then Sailor diluted, and then it went back down. But still holding my 500 shares of Misty. GameSquare has acquired the iconic Cowboy Ape crypto pump from DeFi Pioneer in a $5.15 million strategic investment. Oh my goodness. This is another Ethereum treasury, ticker symbol GAME. Did they really add an NFT CryptoPunk to their treasury? Oh my gosh, bro. If the S&P falls to 5,000, none of us can be surprised, bro. None of us, like, the signs were there. The signs were there. Yep, that is correct. The signs were there. Dude, why is this like... GameSquare's initial NFT investment anchors yield strategy targeting 6 to 10% annualized stablecoin returns. They increased their Ethereum treasury holdings to over 52 million. Well, it's bullish Ethereum because a lot of these NFTs trade on Ethereum. So if you're bullish ETH, I guess these NFT treasuries are a tailwind. But got a lot of interesting things happening in the financial markets right now. Rocket Lab 48.19, that's down about 2%. Wolf Speed 195, that one was up 30% yesterday. It's up 15% today. And then Enphase, that's flat. Enphase got just destroyed after earnings. They got hit pretty bad. And then Coinbase below 400. Again, the other thing about all these like red prices that we're seeing is that we are up a lot, from freaking the April lows. So as much as it sucks for, these stocks to get hit, like Coinbase not at 450 is not something to complain about when Coinbase was at 170 3 months ago, But psychologically, it's annoying because you're seeing your net worth go down in your portfolio. Meta right here, 718. I just don't think it's something you could deeply complain about. Where is Open? Open is 19%. Open Door trying to make a move. Open Door trying to make a move. By the way, let's just look at some of what the analysts said about Google and Tesla. So first on Tesla, you had a lot of analysts that are still pretty damn bullish. So let's take a look at this. Piper Sandler, overweight, $400. We remain overweight. Following today's Q2 results, Tesla is indicated lower by 5%, but we're not sure why. We would welcome any theories. Yes, there's no traditional valuation support at this level, but that was the case before the call. So what changed? The financials were solid, so that's not the issue. Perhaps people are misinterpreting Elon Musk's comment that a coming new product will look exactly like a Model Y. We can see how that might be disappointing, but in the context of FSD, we don't really care what Tesla's next product looks like. So Piper Sandler says, hey, the story is autonomy. Nothing has changed since like a month ago or a week ago. So why are people upset? Mizuho says 375 outperform. Canaccord says buy 333. And then you had Bard that was neutral at 320. And then Truist was neutral at 280. And then on Google, you had pretty much price targets across the board that got increased. The biggest one I saw was Evercore ISI. 240 is what they put. I think that's one of the highest targets on the street at 240. And they say, we're outperform. Search and YouTube growth accelerated. Paid clicks are up. Google Cloud absolutely crushed it, accelerating to 32% revenue growth. Google ramped up CapEx in reaction to cloud strength. This AI investment and product cycle is for real. So they're saying, hey, the CapEx is good because they're investing back in cloud. So the ROI is there and cloud's growing at 32%. So it's not like they're barely growing to justify the investment. So yeah, 240. We think that it's worth buying. Open Door right there, 272. GameSquare 112. Google 192. Uber 93. AMD 159, S&P 634.50 is what you got on AMD. Oklo, is that one still moving? That one is moving 72. That's up 8%. Oklo is up 8%. Manohar, thank you for the $100 super chat. I did already buy BMNR, so appreciate it. Someone already sent $1,500 to buy BMNR, so I still have my 30 shares of BMNR. I'm just not convinced fully in really allocating heavy to the treasuries yet. I need to do a lot more research, but I am starting to get really convinced on Ethereum. I think that deep dive did it for me yesterday. I mean, it really did. So thank you for the $100 super chat. We're in BMNR. We have about 30 shares, and over the next coming weeks, we'll see if that becomes like a much larger position. Andrew, thank you for the $20 super chat. Thanks for what you do every day. Cheers, Andrew. Thank you for being here. And thank you for the super chat as well. I told you guys I was going to show you guys this Jensen clip. Let me play this right here. This is Jensen giving a pretty big endorsement yesterday of President Trump.
With AI supercomputers will probably drive a few $1 trillion worth of AI industry. Right. And so that's only in the next several years. and they're doing great. Arizona's doing great.
And so there's a lot of talk about American competitiveness today, and the White House rolled out its AI action plan, and Nvidia is making very big bets on the United States. And so, as a CEO of a global company, what do you see are America's unique advantages that other countries don't have?
America's unique advantage that no country possibly have is President Trump. And let me explain why. One, on the first day of his administration, he realized the importance of AI, and he realized the importance of energy. For the last, I don't know how many years, energy production was vilified, if you guys remember.
Yeah.
We can't create new industries without energy. You can't reshore manufacturing without energy. You can't sustain a brand new industry like artificial intelligence without energy. If we decide as a country the only thing we want is IP, to be an IP only, a services only country, then we don't need much energy. But if we want to produce things, something as vital as artificial intelligence, and we need energy. And so I'm just delighted to see to accelerate AI innovation, to accelerate the growth of energy so that we can sustain this new industry and go after the new industrial revolution. Big deal.
Can you talk about physical AI?
So there you go. You got Jensen giving a pretty big nod to Mr. Trump and what is going on in the United States. Let's get one of our own analysts to break down kind of what's going on in the markets, Google, Tesla, UNH, and his reaction to Jensen. Kris, good morning.
Dude, it's kind of crazy seeing Jensen say that. But if there's one thing I know about Jensen, dude is pragmatic. He knows like the best way to keep Trump off of his back is to glaze him as hard as he can. And so right now, Jensen is like, I need this Nvidia, I need this AI thing to work for me, for my shareholders. And if I have to say a couple of nice things about Trump, I will say them and get it out the way. You know, it cost Jensen nothing to basically fluff the guy a little bit.
Yep.
And it costs him everything to basically, go the other direction. And what's shocking is that Trump actually came out and said, I was thinking about breaking up Nvidia. I'm like, what? In the cusp of like the AI revolution, you were thinking of breaking up Nvidia for what reason? Like, what was the purpose of something like that? And it's basically just to flex his muscle and flex his power, And so this administration runs sort of like sort of like a gangster, bro,
I think Jensen knows what he's doing, and I think that type of public appreciation for Trump is also something that's going to do well when it comes to negotiations with the White House into the future as well. Kris, I got a lot of questions for you, but I want to start off with a couple names. Google, why is this stock not above 200 after those earnings?
The CapEx numbers. I think a lot of people are a little bit worried that the total amount of CapEx that Google is basically investing in everything may not necessarily materialize into total shareholder return. But in my opinion, that's completely the wrong way of looking at it. They're building out this infrastructure and they're spending this money because they see the forward demand curve, right? They see that AI is not going anywhere, that there's actually still a lot of demand that's being expanded out. And so Google's making those hefty investments right now. And in my opinion, if you're a shareholder of Google and you're a long-term shareholder of Google, just know that these CapEx cycles come and go. And when the pendulum swings the other way and CapEx moderates and then starts to decline in the other direction, that means that the company is going to keep all of that free cash flow and be able to deploy it in other things like share buybacks, which are going to be super value accretive. So right now, Google is, willing to spend the money during the arms race to make sure that it keeps its competitive edge and keeps going forward. I mean, you contrast that with something like Apple. Apple's just building up a cash hoard, but they're completely left out of the AI game, So which one do you want to invest in long term? Do you want to invest in a company that's willing to put itself out there and throw money at the next big thing? Or do you want to just invest in the company that's just playing it safe and his revenue is not really growing much? It's still chilling on its huge cash flows for share buybacks, So that's the key. And Meta's doing the same thing. Meta is like, listen, we don't want to be in a position where we play second fiddle to OpenAI or Microsoft. We want a piece of the action. And that's one of the reasons why, if you look at my Twitter, I posted, like, I'm almost certain that Zuck is looking at this and saying, how can we monetize AI in the future and grow the value of our shareholders, grow value for our shareholders? Like,
you think Zuck would actually try to get into the cloud business?
In a sense, I think they're already in the business by, you know, selling their models and selling access to them. So it's not necessarily just what Google is doing, where you have a complete platform. But yeah, I think there's a avenue for monetization that Meta sees in the future. I mean, bro, how many more users can you add to Instagram? How many more users can you add to Facebook? You know, like at this point, that's a very mature business. You know, and so you have to have diversified streams that are going to be building up your business long term. If you want to keep returning 15, 20% CAGR every year, you need new lines of business. And so, you know, Zuck tried that, of course, with the metaverse. It didn't pan out nearly as much as he originally thought. But once again, this AI revolution came along and he was able to kind of redouble his efforts on that. And then they've got Reels, you know, all those things. So the one thing about Zuck that I really like is that he is not afraid to take risks when it's necessary to bring value to shareholders, versus Tim Cook, who I think is a little bit too conservative with how he approaches the next big cycle.
Yeah.
And so you're missing out on everything. And the thing is, eventually investors are going to wake up to that and say, well, you know what? I'd rather invest in the company that has those growth prospects rather than just, hey, I want to invest in a company who's just doing share buybacks. I mean, and that's not to say Apple's not a great company, just saying that in terms of real innovation, we just haven't seen a lot of that out of Apple in the recent years. I mean, unless you have some differing thoughts on that. What do you think?
No, I agree. I don't think we've seen any innovation. Tesla, what is your take on this one? It's down 8%. Do you think this one can hold up and at least stay above this $300 range?
No, you saw me on Twitter. I said it. It's going to get back to the 200s. And that's a good thing. That is a good thing. If you are a long-term Tesla shareholder, that's a good thing. Why? Because it's almost like a valuation reset, and it does put a little bit of fire under Tesla to, you know, perform. I mean, the one bullish sign that I can say from this call is that Elon is now like, I'm going to go back to sleeping in the factory. I mean, that's always a good sign to me. I mean, this is like one of the smartest guys on the planet, and he's willing to, you know, put himself in that position to give value to shareholders. Sure. But I think look, the earnings call was very somber. Okay. He does not see a lot of near-term catalysts that could propel the stock higher. He prepared shareholders. He was very blunt about it, which is uncanny for Elon. Elon tends to be very optimistic about a lot of things. And his timetables are always usually years ahead of where things are actually going to be. But he even said, like, hey, listen, the next 3 to 4 quarters, we're going to have some difficulties. We're going to have some tough times ahead of us. So, you know, if you're a Tesla shareholder and, you know, you have no intention of selling and you think that, you know, this is going to go to 1,000 one day, just hold and chill and don't do anything. You know, if you want to be tactical, you could maybe trade around a little bit like some people are doing. In my opinion, I think Tesla is like the perfect trading stock because there's such a big retail shareholder base that overshoots on both sides, where they overshoot on the selling and then they also overshoot on the buying. So that's why you can see Tesla going to like 480 and then another time it coming down all the way to the 200s again. You know,
I agree with a lot of your analysis, but I disagree that it's actually going to get back to the low 200s. Like I think that would be overshooting on the selling. I think there would be too many people buying the dip in the 280s, 270s, 250s, etc.
No, I think if the general market kind of takes a little bit of a dump,
then it's possible. Yeah, then.
Yeah, and the thing is, you've been investing long enough to know that we're always going to have pump and dumps in the market, where the market corrects 10, 20% pretty regularly at this point. At least once a year, I've seen the market come down 10%. Like 10% corrections are a lot more normal, especially these days than in the past.
But we've already had that major dump, and it's usually happening once a year. So for that to happen twice a year, I don't know how likely.
I mean, it could happen early next year. It could happen the next earnings report where the numbers even look worse, where free cash flow ends up going negative. You know, Elon is really preparing everyone for that existential issue. Now, Steve gave me a call today, and we both are usually on the same page on some of these things. And I've heard this theory. I don't know if it's 100% true. I'm not going to speculate on it. That Elon wants the stock to go as low as possible, so that once again he can base his forward compensation based on share appreciation with a lot lower of a hurdle to cross over. I mean, like I said, if you have the stock trading at $1 trillion market cap, it's not exactly the easiest to get to a $2 trillion market cap at their margins. Like, I'm sorry, at the end of the day, Tesla's still a hardware focused business. Yes, they have some part of their revenue that's services based, that's high margin revenue, but a lot of their cars and batteries and everything else, those are low single digit margin businesses. And maybe there are some premium versions of things that are higher margin, right? But majority, if you look at the total margin on their stuff, they command a hardware, like 80% of the revenue is hardware margin. So, just keep that in mind. So, and not to mention, if you look at their product cycle, they're moving downward in their product cycle, right? Now, what does that mean? That means you're selling cheaper cars, which is great for the people looking to buy a Tesla, but it also means that, hey, you might end up cannibalizing some of your other higher segment cars. So like if you come up with a affordable car, next generation car, whatever, that might end up slowing down the sales of Model 3 and Model Y that may end up being a little bit easier to monetize. In terms of like profitability, might be some higher profitability there. So a lot of the news that's coming out on Tesla, I'm not saying it's bearish. It just doesn't seem like there's a lot of optimism. And at the current valuation, and Tesla doesn't trade on valuation, it trades on sentiment. I think sentiment is starting to go in the other direction. Elon's somber attitude during the earnings call, I think, was a highlight to that. And we'll see what happens in the next couple of quarters. But for me, if I see Tesla, I said if it gets below 200, I'll start, I'll buy. But if it gets close to 200, I'll probably start like nibbling in a little bit, because usually when it starts to get around that level, there seems to be, usually Elon comes out with a catalyst that just makes the fucking market go absolutely berserk and run. So we'll see when we'll cross that bridge when it comes. But yeah, I'm patiently waiting. I don't need to overpay just to basically be in the name. I like the company, I like the products. I just want a discount before I really like sink my teeth into it. And I've traded in and out of Tesla quite a few times. I bought it when it was 100 a few years ago when we were still doing cash. What is that thing called? Finance junkies. Yeah. I sold in the 220s. And I think, like I said, this is one of the best trading stocks in the market. It's got tons of liquidity, tons of retail shareholders, tons of, that basically make that move higher and lower a lot more meaningful, and makes you good money. So
what do you think about Trump meeting Jay Powell today? And what do you think is going to happen in this meeting?
I don't know. Nothing, probably.
You think he's going to shove him to a wall and tell him to?
No, not at all. I think Trump is coming in trying to just, he's going to do everything in his power to negotiate. He's going to say, look, I don't want to get rid of you. I don't want to even harass you anymore, but you got to work with me. And that's where, the master negotiator part of Trump's personality is either going to shine through, or, we're just going to go back to the tweet storms next week, and we'll see what happens. Yeah.
Okay. Real quick on UNH. So DOJ investigation, stock barely down 2%. Is this a nothing burger, or is this something people should be worried about?
Yeah. In my opinion, this is a nothing burger, only because this investigation has been going on since 2011. All right. There were some whistleblowers in UNH that said that, some of the practices that UNH had were they're not fraudulent, but they're overdoing things. And basically that led to an investigation, and then it got to a higher level. And so the court appointed something called a special master to go and investigate UNH to say, okay, are the claims that are being made against these guys valid claims? And it was actually the special master said, no, everything that UNH is doing falls within the reason of their industry. These guys are very transparent. And then DOJ was like, no, we're going to find something, and so a lot of these DOJ investigations, they tend to be very politically charged. And the thing is, like, insurance companies are the easiest targets because no one likes insurance companies. Do you ever like go get a bill in the mail with insurance and be like, yeah, man, great. I'm having a great day. Look at this. I just got a bill from insurance that I never used last year. And you feel like they're ripping you off. That's how insurance companies are. But when you end up in a really bad place, insurance companies are also the things that kind of protects you against the major catastrophe. So, insurance companies are very easy targets. And the fact that like the DOJ has kind of been on this for the last decade just goes to, and they still haven't really come up with something major, goes to show that UNH probably has some skeletons in their closet, but nothing that's so egregious that they get like nailed dead to rights on. And I think UNH knows this, but UNH, the new CEO, is very intelligent and very pragmatic in the way that he's approaching the situation and saying, look, the DOJ is looking for a scalp. Okay. I do not mind being, opening up the doors to them and letting the narrative kind of like flip. So one of the challenges is after the whole Luigi Mangione thing, the press has been like just hammering the insurance companies because it's like red meat to people reading,
Right.
And so because of that, UNH is saying, okay, we need to kind of like let the spotlight die down on us a little bit. And one of the things that we can do is basically go open kimono, right? Did you ever watch 8 Mile?
Yes, I actually have watched that movie multiple times.
You have, right? Remember that last scene where Eminem goes up against Papa Doc?
Yeah.
Right? And basically Papa Doc is supposed to be this great rapper that's about to come out at Eminem and just destroy him. But Eminem goes first and just says, yeah, I'm white trash, I'm this, I'm that. Go ahead, look. Go ahead, say something about it.
Deprecates himself so that there's no ammo for the other guy to use, essentially.
Exactly. So now you can't even, like, the press can't say, oh, well, UNH is being cagey, they're being dodgy. There must be something going on. Because from what I read in the press release, UNH went to the DOJ and said, look, we hear you guys are investigating us. What do you need from us to do your investigation? We will open our books to you. Go ahead. You let us know what you need and we'll work on it. Now, the main benefit to shareholders because of that is that, one, you're starting to kind of lift the certainty, right? The uncertainty is where...
Reduce the gain on your mic a little bit. It's a little too high.
Yeah. I think I'm just talking really loud.
Move the mic a little away from you. Yeah.
Yeah. Let me actually reduce it down. There we go. How's that sound?
That's better. Yeah.
Okay. So I think we're at a point right now where UNH is being a little bit, smart about how they want to approach this, both from a PR perspective, but also from a shareholder value perspective. So, and I'm sure you've heard of this, the thing that drives markets insane is uncertainty, right? If you have this sword hanging over your head, oh, the DOJ might be investigating, blah, 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 the entire time, people are going to always kind of like not give you the real valuation that you deserve. I mean, look at Google right now. Because of that whole monopoly investigation, Google is not getting its fair value. I mean, it's trading at 21 PE right now, where the other Mag 7s are trading at 30. Right? Even though Google's generating crap ton more value than some of the other guys. So why? Well, a lot of people are saying, well, look, Google search might be disrupted. The DOJ might find them a monopoly and cause them to lose Chrome. So people are utilizing that to lessen their expectations on Google. And I think the market is the same way when it comes to UNH. So UNH's idea is, look, if we work with the DOJ, we get this thing resolved. If we have to pay a penalty, admit some wrongdoing, take a slap on the wrist, that's what we'll do. And once it's over, the market's like, okay, we're back to business again, and we're running, and the market starts giving it a proper valuation.
Do you expect it to move on earnings in 2 weeks, or no?
I don't think so. I think this earnings is going to be somewhat muted in terms of like giving a lot of data on what's going on. I think, we have this new CEO that's just came back. They're definitely going to be a lot more humble with how they approach this. And, you don't want to be way too optimistic way ahead of time, because then you're essentially screwing yourself in the future. Right. So I think they're just going to be very humble. I think the CEO that they have now is a lot more conservative with his guides, a lot less basically doesn't project out like crazy levels of optimism, which end up translating to huge returns. But the thing is, the goal is to be transparent. It's to basically have real targets that are achievable and beatable. So I think the targets that he's going to come up with are, once again, in terms of like the market, are going to be somewhat lower than what a lot of the market what is that thing called, analysts might think, and you might actually see some downgrades. I think a lot of those downgrades have already been factored in. So don't hold me to that. But I think longer term, there's a lot of value to be had in UNH. And there's a lot of financial engineering that these guys can do because they just have tremendous amount of free cash flow, that if your time horizon is not 1 year out, but actually 3 to 5 years out, you're going to do really well in this company.
Yeah. Kris, last question for you. And I put this poll right here in the chat. We have some analysts coming out today saying that the next move on the S&P is down 5%. What do you think? You think down 5% or up 5%? If you had to bet over the next 3 months, what would be the move?
I would say down. I agree with that. The market's just running very hot. It's just running really, really hot right now. And you're seeing all the telltale signs of a hot market. I mean, like the whole thing with Sydney Sweeney, getting with what, like American Eagle, and the stocks running, open door running on what, So I think speculation is here. You never know when the speculation portion is going to end, but you do know that eventually it ends.
Yeah.
I just wish they'd do more bathwater from Sydney Sweeney, bro. What the fuck, bro? I couldn't get any. It got sold out before I got any, man. I mean, what, she hasn't showered in like 6 months or what, bro? Come on, get in the shower. I need my bathwater supply. What's going on here?
There's Kris. There's the sweater. Kris, thank you. We will talk to you soon.
No, there's something more important that we need to talk about.
What?
Okay. This is something.
Shelter. Yeah. You said you wanted to talk about Shelter. Yes. What is going on with that?
This is something the market is not looking at, but everyone in the chat, I hope you're looking at it. You might have personal experiences with it. Shelter is rolling over, and it is rolling over fast. Okay. Check this out. Okay. You see this? This is the Cleveland Fed new rent index. Look at that massive drop off in new rentals, like in terms of in price increases. Okay. That is major. We haven't seen this kind of downward move since the great financial crisis. Okay. Shelter CPI is going to be a major, major problem in the next 6 to 9 months. Now, what I mean by that is that CPI on the shelter side is going to come down so much that it might actually justify everything that the Trump administration is saying. And this is probably why Pulte is getting all like bent out of shape, trying to get Trump to basically Powell to cut rates faster.
This actually makes sense. If Shelter is what turns over inflation, no one's going to give a shit about the tariffs, because you're going to have something much bigger decreasing inflation. And that's why Pulte and Trump are like, hey, Powell, it's time. Tariffs cannot be the thing you're afraid about here.
I'm looking at certain markets in the Sun Belt, especially because we had a big building boom. Vacancy rates they're just going higher. It's literally like, it's like, whew, all right. Yeah. So apartment vacancy rates are going, and there's still more units being delivered every day. New home, like not just new home sales, but existing home sales, they're not working very well right now. This is the peak buying season, and people are just not coming. I'm seeing price reductions in the summertime. That's not possible. You're usually in a hot housing market. You're not supposed to see price cuts, and especially deep price cuts in the summertime, because usually this is like peak buying season. But buyers are just chilling. They're like, look, we can't afford the prices that are out there, and we can't afford the interest rates that are out there. And so a lot of those homes that are not going to be sold this summer, they're going to get dumped into the next year's inventory. And when that happens, you're going to see a massive climb in inventory. So some regions in the country, inventory right now, active listings are higher than what they were pre-COVID. Okay. If you go to Austin, anyone here in the chat knows exactly what I'm talking about. Austin has a huge amount of supply to the point right now where rents are declining at a very fast pace. Florida is the same thing. Even some parts of California are starting to see declines in prices and a lot of price reductions.
Do you think getting rid of the capital gains that Trump mentioned would help the housing market?
It might actually accelerate people selling homes. You know, if you're an older person, like let's say you're a boomer and you want to downsize, but you may end up saying, you know what, fuck it, let me sell my home. I don't really worry about capital gains or anything, or taxes on it. So I don't know. I think it's not necessarily going to benefit anyone in like the 300, even up to I think like 600,000. Because remember, up to 600,000 is tax exempt anyway on a sale. So it's not like
500,000 for married couples, 250 for individuals.
Right. So it's not like it's going to benefit anyone at the low end anyway.
Right.
I mean, it's going to benefit the people you own a McMansion and you sell. Yeah, it might benefit you. But do you get the feeling that Trump, the administration, is really just out here trying to enrich themselves? Like, I didn't feel that way in the first Trump administration, but this time around, Trump coin and all this other stuff, it just feels like, hey, you got to pay to play with Trump. What do you think about that?
I mean, I don't think anyone could. The fact that they launched the meme coin and the fact that the sons are so invested and have all these conflicts of interest, like, yeah, they're definitely trying to get rich. However, I'm trying to figure out how I can get rich with them. And so, like, for example, if you invested in anything crypto oriented, because in January, when the administration basically said, we're going to let everything go wild on crypto. I mean, all right, you make your money, but I make mine as well. Right. And I can't stop them. I can't stop Trump from making a meme coin because he's Trump. He's going to do it. But I just need to make sure that I can benefit from that as well, even if I don't like that he's doing it.
Yeah. I mean, dude, you're like 80 something and you're still trying to like gather more. You know what I mean? Like, come on. Like, you're a billionaire, bro. The hell?
Oh, he's actually a billionaire because of DJT stock. Like a majority of his wealth right now is coming from DJT's market cap, which for some reason trades at $5 billion. And does $2 million of revenue.
The question is, should we buy some puts on this thing when he's about to leave office? Do it a year ahead of time. Like, do it like, what is it? Like 2029?
Yeah. Well,
yeah. So basically when the 2029 options come out, buy some puts on it. Because, once he leaves, his power is going to be gone. And I don't think his family has enough juice to carry the next generation.
Tom Lee was on a podcast yesterday, and what he said is he had something very interesting about tariffs. He said these tariffs are not done via Congress; they're all executive orders.
Yeah.
So he said when Trump's gone, like everyone's freaking about tariffs, but when he's gone, who knows if these tariff rates, if we do EU 20%, who knows if 20% on the EU is actually going to stay in the new administration? So one of his arguments to be bullish was like, hey, like these tariffs, Powell's so worried about them, but they're not going to be permanent things. And Congress is never going to agree on them in the next administration. So that's
unfortunately, that's not necessarily true though, Amit. You know why? Because DJT put Trump tariffs on China. Trump won, and Biden didn't lift them.
Well, that was Biden's fault though. It's not like Biden could have lifted them, right?
The problem is when it comes to things like tariffs and everything else, once you get addicted to that revenue, it's really hard to get off of it. If you start to see, I mean, bro, the country's generating what, 300 billion in tariff revenue this year projected.
Yeah.
Go explain that to Congress why you need to end tariffs, and lose 300 billion a year. I mean, that's a sad reality. Once you get addicted to an income source, it's not easy to give it up. So unless there's some kind of major change that kind of forces the issue, and the next president or whatever is a little bit better versed in economics, that somehow figures out how to change things around. So I don't know. I do think that Trump is going to leave us with a lot more national debt than he started off with. And I think that's one of the things that I think a lot of people have kind of turned on him a little bit, especially people who were a lot more fiscally conservative. And just, by the way, did you see the South Park episode about him yet?
No.
You didn't?
They
Go
made a new
watch
episode
it.
about him? No, I didn't see it.
Dude, the entire episode, they came after Trump hard.
Oh,
it's pretty bad. It's pretty bad. All right. Well, I'll talk to you later, guys. Put you to sleep. Now let's wake
we
up.
Love you. Thank you,
All
Chris.
right.
Chris's Twitter right there in the chat, Chris. We will talk to you as we get earnings coming out over the coming days, and hopefully Google can make its move as well.
Take care, guys. Have a good one.
Take care. All right, folks. Nothing really moving in the broader markets. I mean, pound here got to 155, kind of heading back down to 154.60. Tesla, it looks like she wants to break 300, but she's not really breaking 300 yet. 303. And then Googs, I still can't believe why the market is not giving it love, but it's not giving it love. 192.63 SBET right there. Where is that? That is up a little bit, 7%. Open Door is actually the biggest mover today, up 20%. Got rejected at 291, now at 276. But other than that, not a ton of wild moves. Ethereum is moving a little bit right here. ETH is, well, it's up 2%, 3,700. Hit 38.50 last week. And BMNR options are active, and they're buying is also acting as well, to about $1 billion worth of Ethereum. LIDAR dumped. That one dumped. LIDR. Okay, it's still up 170%. It was up 400%. Yeah, I mean, it's also getting towards the end of July where, volume is going to be dying out across the board as people go on vacation. Webull down a little bit. It is breaking above 17. Webull holding 17 is not too bad, but that's down about 3%. And then the big companies that needed to perform, they did their thing, but Google is not that exciting to the market. And Tesla, you can see this 8% decline right here. Nvidia, at least, is holding 172. GameSquare, that's up about 1.18%. Robinhood down 0.5%. Robinhood's basically been flat all week, not doing much. And then Bitmine trying to recover, up about 5% right here. Why did you wear a Christmas sweater last night? Because Christmas in July, dude. Who could hate Christmas in July? Dude, I have another one. I was going to wear another one this morning. I was going to wear another Christmas sweater. Dude, Christmas in July. You can't hate it. All right, Lisa Su, let's get her thoughts from that AI summit yesterday on the future of AMD as well.
Public sector, private sector, bringing our best technologies, bringing our best ideas, open ecosystems, and to come together and really, solve some of the most important challenges in the world. So yeah, I think it's a great day. It's great to be here with so many people from different parts of the AI ecosystem, and we're enjoying it.
As you know, Lisa, sometimes I like to get a little bit in the details. And so when I think, for example, about MI 300X, energy and efficiency, and when I was reading through the policy document, energy is clearly a consideration here. Was that something that you and AMD were concerned about? As all of this infrastructure gets built out with your technology underpinning it, what was the anxiety level about, well, we're not going to be able to power all of these things?
It's a great point, Ed. I think what we see is, computing is the foundation. So high performance computing is the foundation to unlock all of this AI potential. We want to make sure there's enough power for all the chips that we're building. And more than that, we want to make sure that, the US is actually leading that race. And so we're very focused, as you know, Ed, on energy efficiency. We want our chips to be the most energy efficient chips. That being the case, the demand is so high for computing that we need to ensure that the power is available. And so all of the conversation about how we accelerate the the building of data centers and power capability in the country, I think, is very, very welcome.
There's an element of exporting the American technology stack. The biggest piece of news, of course, in the recent weeks has been the ability to sell some semiconductors back into China. But when you read the AI action plan, do you get a sense that there's a next step to that? I'm not necessarily talking about a replacement for the diffusion rule, but it seems as if the policy is that it's good for America to export its technology to the world, even to economic adversaries, for want of a better expression.
I think it's a super important point. And, the point is, computing is a matter of national security, but it's also important from an economic standpoint and an overall ecosystem standpoint. So it's all about balance. And the balance is we certainly want to ensure that we're using our technology to make America stronger. but we also want the rest of the world developing on our technologies. And so this is the balance. It's a tricky dribble, by the way. I will be the first to say it's a tricky dribble, but I think the administration has been doing a good job, just working with us in industry and also ensuring that we understand all of the constraints. And we welcome the fact that we want the rest of the world using American technology, and we welcome all the conversations and dialogue in those areas.
You ignore
very similar to what Jensen's been saying. Obviously, this idea that the American technology stack should be the way that the rest of the world builds AI, and that's why it would be important for us to export to China versus to allow Huawei or another competitor to eventually catch up, which would not be good for American interests. BMNR making a bit of a move, up 7% right here. So you're getting a little bit of a pump. I think that's probably on ETH. Bitcoin as well, 119. So that one is trying to run. And Ethereum right here at 3,700. 3,700. Amazon faces UK lawsuits worth up to 5.4 billion from the UK on retailers. Amazon lost 234. Now it's at 231. That doesn't mean they're going to pay 5.4 billion, but that is a little bit of a overhang they could have. 5 billion is a lot, though. I mean, Google had a $6.7 billion lawsuit from UK, I think 2 months ago. Is BMNR pumping because of options? Yeah, it could be. I mean, it definitely could be now that they're officially active. You're just going to have a lot of people buying and selling those options. I mean, if you sell a put, you have to have enough collateral to be able to buy those 100 shares. If you buy a call or sell a call, you have to buy those 100 shares to cover the call. If you're doing it even in a naked way, eventually you're going to have to cover those positions. So there's just like a lot of more activity that gets into the stock when they introduce options. And that could be creating a pump. But again, like the thing about the treasuries that's really, I keep saying this, but it's like you can't trust them, dude. Like they're going to dump whenever they want to dump. And when I mean dump, I mean like shares get dumped on you. So it's like you really got to buy it and like not look at it kind of for the next 5 years, right? Because when it runs up, you bet your ass Tom Lee is going to dump because he needs to buy more Ethereum. He needs to raise money for it. SBET is going to dump. Like they are going to put more shares on retail, and it's not really their fault. That's just the nature of how they can get more money to buy ETH. But you're just hoping that what they can do with the Ethereum is enough to compensate for the dilution. But as a shareholder, that kind of sucks knowing that any momentum it gets, it will get interrupted by a dump. Unless Ethereum goes parabolic. Like if Ethereum goes to 7,000 tomorrow, then no dump is going to stop it from really maintaining a lot of momentum. But if Ethereum's flat, you got dilution coming up aggressively. Isn't that perfect for cover calls? Yeah, to an extent. That is perfect for cover calls. But I don't know what the cover call premiums look like yet on BMNR. And I think that'll take a couple weeks to see, are people really willing to pay a ton for these options? Because MicroStrategy, it's proven people are willing to pay a lot of money. Is that the same for this one? Okay, I'm looking at the premiums right now. August 15th, the highest strike they have is 60. They're paying you $1.60. So if I were to buy 100 shares today, which is 4,200, 160 divided by 4,200 a month out. Yeah, that's about 4%. That's pretty good. Not going to lie. And if I do a $50 call, they're giving me 300. That's almost 7% in a month, less than a month. August 15th is about 3 weeks away. I mean, those premiums aren't horrible. Those are actually pretty damn good premiums. Those are actually pretty damn good premiums. So already, I mean, the pricing can change in a moment, but like so far, those are not horrible. A $45 call is paying you $4 of premium, which is also, that means if you bought it today, you're making 10% in 3 weeks to sell a $45 cover call. It's not that crazy. I sold the August 15th and I already got $2 in premium. Oh, wow. So you got more. It's looking at 160 on my chain. If you got $2, you got basically above 4%. IV is 150% very juicy. Yeah, the IV on the 60 is 153 and IV on the 45 is 135. You got 350 yesterday on the $50 covered call. Yeah, today it's at 270, so it's down 16%, so you're up 16%. Wow, dude. Not bad. Not bad. if that's your thesis covered calls, then I mean, yeah, the premiums so far on day one are pretty good. But you know, there might be more to dive deeper into when it comes to the treasury thesis in general. Palantir right here, 154.74, trying to go to 155. Iliano tweeted about Sydney Sweeney, who works at Palantir, and Benzinga wrote an article about him mentioning Sydney Sweeney, which is hilarious. It's probably one of those AI articles, but it did hit the business wires. Iliano, a Palantir executive, humorously suggests hiring actress Sydney Sweeney as a model for Palantir would be important for the company. Iliano was joking, obviously. But that is hilarious, dude. Like, the Sydney Sweeney pump is like a real pump. I think she's become like America's newest sweetheart, right? Like, she's, even though she was on a show that was very like not kid friendly, Euphoria, she's like one of those like girl next door type of figures. And I mean, I'm curious how much American Eagle paid her. How much is their market cap? American Eagle's market cap is $2 billion. I mean, if I'm Sydney, I'm asking for 20 million up front. Like, I like minimum 20. I mean, like maybe she would have done it for 10 million, but there's no way she's doing it less for less than 10 million. There's no way. Yeah, move over Taylor Swift. Exactly. Exactly. I mean, she is one of those that is getting the excitement. Let me see if I can pull up her commercial, because she did a 20-second commercial on it. Got to see if I can pull it up. But that and the soap thing, I forgot what soap company she worked with, but that and the soap company she worked with was like the major marketing. By the way, we got to talk about the biggest app on the App Store now. You guys are not going to believe it, but I saw it last night and I was like, okay, this is pretty wild. So I'll show you that in a second. Any thoughts on the Figma IPO? I like it. I'm going to request some shares. I don't know if I'm going to get those shares, but I think it's going to be very oversubscribed. And it's going to be hard to get the allocation for shares. But if you do, then I think it will do well. Okay, let me see if I can find this commercial. And then I will show it to you. Oh, here it is. Here it is. Okay, here it is. So this is the 30 seconds that American Eagle probably paid $20 million for.
I'm not here to tell you to buy American Eagle jeans. And I definitely won't say that they're the most comfortable jeans I've ever worn. Or that they make your butt look amazing. Why would I need to do that? But if you said that you want to buy the jeans, I'm not going to stop you. But just so we're clear, this is not me telling you to buy American Eagle jeans.
Sydney Sweeney has great jeans.
You see what I did there, right?
Dude, I mean, is that worth 20 million? Is that that's definitely worth the stock going up by almost 300 million in the past 24 hours. So I don't know. Maybe it is. Maybe it is. But there you go. That is Sydney Sweeney. All right. So the highest ranking app on the App Store right now that is beating ChatGPT and Grok, ladies and gentlemen. For those that haven't heard it, get ready for this. It's an app called T. It's an app called T. It's beating ChatGPT right now in the United States iOS App Store. T is a women-only app where users anonymously share information and warnings about men after they go on dates to spot red flags and get feedback. This is beating ChatGPT. So ChatGPT gets hundreds of thousands of downloads a day. This is beating ChatGPT. Now there is a platform when women go on dates to come to this anonymous app and basically spill all the tea or the secrets about their experiences. And it's a crowdsourced social network to discuss red flags in dating men. I mean, obviously I can see why it's going number one. If you're a girl who's dating, like that's you probably want it. Like if you're in New York and you're dating, you probably want to know about a certain guy in New York. It just feels like one of the most stalkery apps that I've ever heard of, right? It's like, it is like you can get the full details of a guy based on this app from other people that have said something about the guy, which obviously is going to have tons of bias because it's coming from different people's perspectives. But what a company, dude. The fact that they were able to dethrone ChatGPT in the App Store and do this. I mean, I see the bull case on the product. I also do think this could get manipulated and abused in a lot of different ways. And as of right now, it is still number one on the App Store. I checked in the morning. It's number one. Yep. Number one. ChatGPT, Threads, Google Maps, WhatsApp, TikTok. And then you have Gmail. Yeah, if there was a male version, I agree. I do think society would feel it is very patriarchal, or whatever adjective you want to use, on that type of an app existing. So I don't know. I don't know if the app will succeed. Their mantra, to the app's credit, is we're helping women be safe. And the whole goal is to make sure that you don't go on a date with someone who's like a horrible person. That's probably the right way the right way to brand it. Granted, the question is just, does it sustain that type of ethos? I think they're gonna get bought out by Bumble or Tinder. I think that's their plan. I mean, could they be bigger than Bumble and Tinder? Yeah, because Bumble and Tinder are kind of boring apps at this point, and they're very mature businesses. They're not really growing. Although Bumble stock has had a hell of a run over the past couple of months. 843 right here on Bumble. But this seems like an app that's more primed for like advertising. And quite frankly, forget advertising. People would pay $20 a month to use something like this, even if the churn would be high. So I think that might be their plan, how they go. Circle right here, down about 5%. I feel like that's horrible for people dating. I want to date someone because they like me, not because they like or dislike me based on someone else's opinion about me. Yeah, I agree. I mean, it's very similar to what Zucks did in 2005 with, I think it was called Face Smash. And it was a way for people to like rank other people in the campus, right? This is just like the modern day version of pseudo anonymous discussions on certain people. Which means, I mean, if this app really stays number one for the rest of like the year, I mean, across the country, if you're a guy, you go on a date, I mean, who knows, dude? If you're going on multiple dates, you might be getting exposed on some app about everything around your personality. Nvidia right here, 173, that's up 1.3%. Misty's kind of flat, and then Robinhood trying to go green back to 102. But that's at 101.82. Yeah, Palantir back to 155 as well. Dude, Threads is still number 3 on the App Store, but I don't know anyone who uses it. Palantir 155. Like, does anyone here use Threads at all? I don't use it. I think if I click on it, it's by accident when I'm on Instagram. But it is still number 3 on the App Store. And there's just so many users on Meta that, they get people to download it every day. Hood earnings thoughts. We talked about it on Monday. We did a whole podcast on it. I think they'll crush. I have no idea what the stock's going to do. I think the stock is taking a well-needed breather. Like, it's been flat all week. It's just consolidating. It's holding above 100. I think that's very normal. And Vlad's going to have to put up some monster numbers to get this one to move next week. But even if he doesn't, I think holding 100 will be good going into the end of the year. But I do think if we get an S&P, 120 is on the table. The question is just, can we actually get there? Let's finish up a little bit with Jensen and what he was saying about some of this AI factory and robotics revolution, and then we'll keep going from there.
Versus data center AI. We talked a little bit about this today. Is there a threshold where you see physical AI accelerating and ultimately the deployment of chips outpaces the deployment of chips in data centers? Is that where the world evolved to, or what do you think
everything in the world
of the world looks like?
Yeah, excellent. Everything in the world that moves will be autonomous someday. And that someday is probably around the corner. So everything that moves. We already know that your lawnmower is going to, who's going to be pushing a lawnmower around? That's craziness. Unless you want to. I mean, it's, And so I think everything that moves will be autonomous. And every machine, every company that builds machines will have 2 factories. There's the machine factory, for example, cars, and then there's the AI factory to create the AI for the cars. And so maybe you're a machine factory to build human and robots. You need an AI factory to build a brain for the human and robot. Right. And so every company in the future, in fact, the future of industry is really 2 factories.
Yeah.
Tesla already has 2 factories, right? Elon has a giant AI factory. He was very early in recognizing that he needs to have an AI factory to sustain the cars that he has. Now he's got AIs in the car, but in the future, instead of, I imagine that in the future, instead of a whole lot of people remotely monitoring air traffic control, it'll be a giant AI that's doing the remote control. And then only in the case of the giant AI can handle it with a person come in to intercept. And so I think you see that these industries in the future, every industrial company will be an AI company, or you're not going to be an industrial company.
There was a couple of moments throughout the course of this year where people almost threw in the towel and said, "Oh, we lost to China," right? There was the DeepSeek moment. Then maybe last week, there was this Kimi model moment. But then it kind of fizzled out. Can you just explain to us how big of a threat they really are in terms of getting to supremacy, getting there first, whether it's AGI or superintelligence?
Yeah, excellent question. The Chinese AI labs are the
Tesla down 9%, 302 folks. BMNR up 10%, Tesla down 9%.
World's leading open model companies. They offer the most advanced open models. Open source is fantastic. If not for open source, we know startups won't exist. And to the extent that we believe that the future industry is going to be today's startups, they're going to need open source models. And DeepSeek, when it came out, it was a great win for the United States. It was an incredible win. What people did, and two reasons. First, imagine if DeepSeek came out and only ran on Huawei. I just want us to pretend. Use that thought experiment.
Totally.
Right?
You got two parallel universes.
Exactly. Could you imagine if QN came out and it only worked on non-American tech stack? Yeah. Could you imagine if Kimi came out and it only worked on non-American tech stack? And these are the top 3 open models in the world today. It is downloaded hundreds of millions of times. So the fact of the matter is, American tech stack, all over the world, being the world's standard, is vital to the future of winning the AI race. You can't do it any other way. We've got to be, as you know, any computing platform wins because of developers.
Yeah.
And half of the world's developers are in China.
So speaking of developers,
the second, I'm sorry.
No, please go ahead.
The second thing, and it's really a big deal. When DeepSeek came out, we were thrilled for the second reason, which is we now have a super efficient reasoning model. And the reason for that is because the old models are one shot. You give it a question, everything was memorized. The pre-training is basically memorization and generalization, 2 concepts. Post-training is teaching you how to think. And so now with DeepSeek R1, Kimi K2, Q13, you now have reasoning models that can help you think. And so the reason why I was so excited is if each pass of a thought is energy efficient, then you can think for a long time.
Right.
Yeah.
The last question from me is that we see this capital being applied to human capital in a way that we never thought was possible. It used to be NBA players signing $300 million contracts. Now it's model researchers. And then there was a post this weekend that said that there was a person that was offered $1 billion over 4 years by Meta. Now, if that's happening at this layer, why hasn't it happened at your layer? Because you are the enabler of all of that. And how do you think all of this human capital is going to actually play out?
First of all, I've created more billionaires on my management team than any CEO in the world. They're doing just fine.
Wow, rare flex moment from Jensen. He doesn't tend to flex like that, but I like it. I've created more billionaires on my management team than any other CEO.
Okay, and so, and they're doing. Don't feel sad for anybody at my layer.
Yeah, everybody's doing okay.
Yeah, my layer is doing just fine. But the big idea though is that you're highlighting is that the impact of 150 or so AI researchers can probably create, with enough funding behind them, create an open AI. It's not a
150 people.
Yeah, it's not. Well, DeepSeek's 150 people.
Right.
Moonshot's 150 people.
Right.
Right.
Crazy.
And so, I mean, look at the original OpenAI was about 150 people. Yep. DeepMind, and they're all about that size. I think there's something about the elegance of small teams, and that's not a small team. That's a good sized team with the right infrastructure. And so that kind of tells you something. 150 people. If you're willing to pay, say, $20 billion, $30 billion to buy a startup with 150 AI researchers, why wouldn't you pay one?
Right.
Yeah.
Hey, speaking of options,
By the way,
somebody told me
we need to wrap because
but
we have the
I'm going to do
second
this one question. Somebody who was inside your organization told me with the options that you have a secret pool of options and that you will randomly just, if somebody does a great job, drop a bunch of RSUs on top of them. and that you have this like little bag of options you carry around and that you give
That's
them out.
nuts.
Is that true?
Yeah, I'm carrying it in my pocket right now. So listen, so this is what happens. I review everybody's compensation up to this day.
Yeah.
At the end of every cycle, when they present it, and they send me everybody's recommended comp. I go through the whole company. I've got my methods of doing that, and I use machine learning. I do all kinds of technology, and I sort through all 42,000 employees, and 100% of the time I increase the company's spend on OpEx. And the reason for that is because you take care of people, everything else takes care of itself.
Yeah. All right. Well
Jensen,
done.
thank you.
Thank you, Justin.
Great to see you.
Wow. There you go. Not too bad with Jensen. And not only is he taking care of his people, obviously he's taking care of investors as they've been rewarded handsomely over the past 5 years, definitely over the past 5 months for trusting in Nvidia. And he's a CEO that continues to execute. Video right here, 172.94. Tesla looks like she wants to lose 300, folks. 301.67. 301.67. She is $1.70 away from losing 300. And if she loses 300, she might as well give us 280. Might as well give us a real dip if you're going to lose 300. It either bottoms out around this range and then makes a little bit of a V shape, or it stays here. BMNR going the opposite. BMNR going the opposite right there. 15%. 15%. Wow. On BMNR. That's a hell of a candle, bro. I guess the street woke up and realized they bought a ton of Ethereum, and that's bullish. What about SBET? SBET's up 8%. BTBT is flat. BMNR is the one that's moving. Tesla close to losing $1, or close to losing 300, $1.50 away. Selling puts on BMNR has good option premiums. Yeah, I mean, look, I'm looking at the premiums right now. It's pretty damn good across the board. Puts and calls. So the options market's juicy. Now it's got to sustain those types of premiums. But if it can, I mean, I could imagine this becoming one of the larger vehicles for option trading. Yeah, maybe Tom Lee's taking us to the promised land. At what point is grab a buy? 520. I think grab's a buy right now. I think intrinsically it should be worth 750. So about grab at 530, 540, 528 a couple days ago. So yeah, I think it's there. I think earnings are what's really going to determine it now, and we got to get some good stuff going into earnings next week. Next week's gonna be wild, bro. Got Hood and Grab on the same day. You have Microsoft and Meta the same day as well. You got a lot of companies reporting. Intel today after hours, and then Amazon and Apple the week after. So next week's going to be pretty intense. Uber right here, 92.64. AMD, 162. AMD, 52-week highs. 162.72. If it cracks 163, then there you go. Kind of off to the races, along with Nvidia trying to get back to 174 at 172.76. Is MSTR going to do something? MSTR. Well, again, the reason it's down is because of Saylor diluting on Monday, about 700 million worth of shares. That's why that one got hit. What else? Do we have any other news? Do we have anything else going on? Oh, wow. Hold on. MicroStrategy, speaking of MSTR news, MicroStrategy will raise $2 billion for Bitcoin, up from 500 million. I think they're doing this via that new thing new type of preferred shares they introduced 2 days ago. So it looks like there's more demand for it. They're raising it by 4x. They'll be buying more Bitcoin most likely. And then the other headline, Fed is working with the White House to accommodate their visit. The Fed is working with the White House to accommodate their visit. Yeah, STRC for MicroStrategy. Dude, I just feel like it's going to be so awkward when Trump walks in. UNH down 3%. And I wonder how that meeting is going to go. But I agree with Kris. I think Trump's going to be like, hey, I don't mean to be that type of guy. I don't want to be super aggressive. But can you please just listen to me about why 25 bips would not be that bad to do? July probabilities for a cut are near 0. September probabilities are 58. So kind of unchanged throughout the week. $2.5 billion budget for Trump's visit. Exactly. I mean, that might be one of the. I still don't get why they're spending $2.5 billion on the Fed meeting, the Fed building. I still don't get that. So imagine that's Trump's icebreaker. He's like, so this is what $2.5 billion gets you, huh? Because I still don't think we have an answer exactly on why that much money was spent. But hopefully the meeting goes well and we get closer to a little bit more of a rate cut. BMNR again, still moving 11%. It is green. Steve, good morning.
I got literally 2 minutes before I have to get on the meeting.
Okay, 2 minutes. What was your reaction to Tesla and Google?
Alphabet absolutely smashed. They destroyed the bear narrative about search being cannibalized by AI. It grew significantly. Cloud growth out of control. I mean, anybody who thinks that this company is going to become irrelevant is extremely mistaken. I mean, they just once again proved why they are who they are.
Okay, and then your favorite company, which is down 10% right now, Tesla. What was your thoughts on their earnings?
It's going lower, just like I said. I mean, he sounded sedated yesterday. I don't know. I think that he made a very big mistake with the administration. And when you say that you're going to have robotaxi in half of the cities within the year, I don't see it.
You think it's a little bit of a stretch?
A little bit is an understatement, I believe.
Okay, so bullish Google, bearish Tesla. That's basically your take.
Yeah, I mean, that's exactly what I thought was going to happen. I actually thought Tesla would have been down more. I think that it was a lifeline that they met expectations as low as they were. And the fact that they turned the conference call into an advertisement to go buy cars before the subsidies run out, I mean, that's not bullish by any means.
Yeah, that was kind of a little cringe, a little funny.
So it makes you wonder what's going to happen in Q4 and Q1 of 2026.
Yeah. All right, Steve. I'll try to call you on the close if you're free. We'll talk to you.
I'll talk to you later.
All right, later. That was kind of weird, bro, when they started advertising. I mean, I get why they were doing it because they know the EV credit's going away. That was definitely a little weird. Granted, again, if you're buying Tesla, you are not buying it for EV sales. You really do believe that there's a broader narrative that eventually is playing out. It's just, also Kris mentioned this. He was absolutely correct. I mean, Elon was blunt on the call yesterday saying that this thing is going to take time and that it's not going to happen overnight. Let me see if I can get the exact clip from Elon specifically saying that it's going to take time. Let's see if I can find that moment, because he literally said each of the quarters was going to be moments, or there was going to be moments that you have to prepare for some material weakness. Okay, so I'll try to get a couple clips. Here's the one about XAI. This one kind of pissed me off, this answer, but let's listen to this and then I'll get the other clips.
Great. Thank you, Lars. The next question is, can you talk about the benefits of Tesla investing in XAI?
This is not the forum to discuss this topic. I mean, if there is something which we need to discuss, we'll discuss it separately.
I think obviously, we're a publicly traded company. Shareholders are welcome to put forward any shareholder proposals that they'd like. I've recently encouraged that, and then have shareholders vote, and we'll act in accordance with the shareholder wishes.
So again, kind of disregarding that question. And this was when Elon said, next couple quarters, you got to prepare for some weakness.
But we're still at the relatively early stages of autonomy. On the other hand, autonomy is most advanced and most available from a regulatory standpoint in the US. So, I mean, does that mean like we could have a few rough quarters? Yeah, we probably could have a few rough quarters. I'm not saying we will, but we could. Q4, Q1, maybe Q2. But once you get to autonomy at scale in the second half of next year.
He's saying, hey, until Q2 2026, I mean, he's explicitly saying, don't expect this to be that pretty.
Certainly by the end of next year, I think I would be surprised if Tesla's economics are not very compelling.
Great. Okay, and then the other last part I want to show you guys is the part about the new affordable vehicle, which Elon had to literally just say what exactly that's going to look like. Let me see if I can pull that up. And yeah, okay, so this, I think this is the one. All right, here it is.
Available from a regulatory standpoint in the US.
Is this the one? Hold on. Yeah.
So, I mean, does that mean like we could have a few rough quarters?
Oh, wait, no, hold on. Where's the one I'm at? I think it's, hold on. I just had it. Give me 1 sec. I just had it. Let me pull it up here. Where's Tesla? Tesla stock is 302. So it hasn't broke 300 yet, but it looks like it has a shot to be breaking it. Now, why Q2 2026? I think because he thinks it needs about a year of expansion of robotaxis across the country, which obviously will just take a little bit more time. Okay, here's the moment where they talk about the affordable cars.
Cost downs. You also had this unboxed architecture that I think you said would not be part of this sort of interim approach. Can you update us on what we should expect this thing to actually look like?
Oh, we won't get into the looks because
What's the Model Y? Yeah. Just lift the cat out of the bag there. Dancing cat that can sing and dance, but it can talk and sing.
You see that? The CFO is like, we don't want to get into the design, and then Elon's like, you know what? Let's just tell everyone what it is. It's a smaller Model Y.
Oh, we won't get into the looks because
What's the Model Y? Yeah. Just lift the cat out of the bag there. Dancing cat that can sing and dance, but it can talk and sing and dance. Though that's the cool part. Yeah, I mean, the fundamentally the biggest obstacle remains that people just don't have enough. Some people don't. The desire to buy the car is very high. Just people don't have enough money in the bank account to buy it. Literally, that is the issue. Not a lack of desire, but a lack of ability. So the more affordable we can make the car, the better. I think it's going to make it will be a very big deal when people can release their car to the fleet and have it earn money for them. Which, like I said, I feel confident in saying that'll happen next year in the US, at least. And in the US, we're legally allowed, appropriate disclaimers, and that'll make the affordability dramatically greater.
So one of the reasons the stock could be down is because people thought there was going to legit be a new form factor, and if it's just going to be a affordable Model Y, that might not be that exciting. Now, the Model Y is one of the best-selling cars on the planet, so it's not like that's a bad car. It's just a stripped-down version of it. Might not be that exciting. And if it's not that exciting, then maybe it doesn't have that much demand. So there you go. Isn't a smaller Model Y just the Model 3? I mean, Model 3 is really small compared to a Model Y. I guess a stripped down version of a Model Y is still bigger than a Model 3, but not as small as a Model 3. I'm confused why it would be more affordable. Like, what exactly are they taking out of it to make it more affordable? Google, by the way, still barely budging, 194 right here. But Tesla not breaking below 300. So I think that would be the question. But as you heard Elon say, it's going to take at least another year for positive earnings inflection, which to me, kind of music to my ears as someone who wants to build a position and someone who can benefit off the covered calls. But for someone looking for price appreciation on Tesla from these levels, I don't think you're seeing it. And Elon tends to sugarcoat everything and be super optimistic and like paint this fancy story. Yesterday, he straight up said, guys, like, you gotta be patient. You just gotta be patient here. And that could be a strain on the stock overall. So that's what we got on Tesla. 172 on Nvidia. Pound here did break 155 multiple times today. 154.45. Hoodie 101. Amazon 232, trying to go green. Meta 716. Apple 215. MicroStrategy up a little bit. Bitcoin and Ethereum making a move. Ethereum 2.47. And BMNR losing 45, but now at 43. Up basically 10% of the day. This sounds like this is not the time from explosive growth. Yeah, agreed. I mean, this sounds like they're building the foundation for explosive growth. I mean, eventually Tesla will have explosive growth. It hasn't happened for the past couple of years. I feel confident it will happen eventually. But explosive growth right now is Nvidia. It's Palantir. It's Robinhood. It's Broadcom. It's AMD. You know, like it's these companies that are just like really capturing the moment. By the way, speaking of the semiconductors, Micron, you know how Goldman Sachs downgraded SK Hynix, which was like one of the leaders of the memory sector of the semiconductor ecosystem. They reported a second quarter profit of 69% year-over-year growth, and revenue hit a record high. So it feels like we're very early in the AI revolution, and Micron getting discounted because SK Hynix got a downgrade feels a little weird given SK Hynix just smashed earnings, and Micron's probably going to fall as well. So although this one is down from like 120, if they have good earnings, hopefully that one makes a move back to the top. Yeah, TSMC as well. They absolutely crushed last week when we had those earnings. Humanoids have a lot more competition than its cars do. Just saying, I don't disagree with that. I do think though that the Chinese humanoid robots are intrinsically going to have an issue coming into the U.S. markets. I mean, I just don't know if American consumers would want a Chinese robot in their house. I feel like the answer is no. B, American companies, does Walmart and Amazon want these CCP types of robots? And like, it's from a national security perspective, I think they're going to have to buy from American companies. But across the world, yes. I mean, there's going to be other countries that are much more friendly to China. And if Tesla's saying, hey, 30,000 a bot, and China's saying 15,000 a bot, I mean, unless Optimus is that much better, yeah, they might end up buying the Chinese bot. So globally, there might be a ton more competition on that as well. But he did say, yeah, 1 million a year, but in 2030. So that 1 million a year won't happen before 2030 in terms of actual ramp, which would be basically 100,000 robots a month is what he said they would be producing. I mean, regardless of Hood earnings, your thoughts on the likelihood that we are in the 80s again? I would put it at like, I don't know, 25% chance. I'm just like throwing out random numbers. I really don't think we go back to the 80s unless we have a macro drawdown across the market. Like S&P down 5%, yeah, we could get there. But Hood itself, even if they have not the best earnings, which again, we did the numbers, they're going to have good earnings. They might just not be like blow out the quarter quotings against the expectations. I don't think we're saying 80. I think the number I said on Monday was like 92 is one of the key levels. I think that if it does get hit, it would get hit to. But I think the probability of 80s is low. And there's just too much growth to discount when you think of that, especially going into banking and tokenization that's launching in October and September. So yeah, I think that would be a dip that I'd take advantage of. I'm saying 25% though, because it's the end of July and then you just never know, right? Like the macro is the macro. You never know. If August starts off kind of crappy, then if Robinhood has 915 million on earnings instead of 920, maybe the street gets upset. Like look at Google. I mean, Google put up just some of the best numbers you could ever imagine, and they're barely budging, So it's kind of like when you get to this point of the year, you just don't know how the market's going to play out. S&P 500, by the way, since July 1st, I believe is historically matching the past decade's gains. It's up to, 2.9% since July 1st. S&P's up 2.9. On average, we get a 1.28% move for the past decade in July. So if we end at 635 on the S&P in the next week, that's a 3% move in a month, which, to say that's going to be followed with a 5% move over the next coming months, not until you get maybe a 2 to 3% decline, right? You give back some of those gains before you make your move for the Santa Claus rally if we get it. But if we ignore August and September and we just keep pushing forward, then, I mean, we're going to be closing in on 6,800 by November, December, which would be incredible. It's just a question of, can we hold up that multiple? Wow, BlackRock, 10 billion in assets on Ethereum ETF. My goodness, dude. People are buying Ethereum. They're buying. Oh, that's another. I might buy Ethereum through the BlackRock ETF over just the asset, because I can't write calls against my Ethereum. Now I can stake my Ethereum, but I feel like I can get more premium from the calls versus staking. So I might, whenever I buy Ethereum, I might just do it through BlackRock's fund as a better way to get some alpha. Gordon Johnson reiterates sell on Tesla, maintains his $19.05 price target. Okay. Gordon Johnson giving you a $19 price target on Tesla. So there you go. Wow, C3 AI. They're looking for a new CEO. Tom Seibel potentially stepping down to health concerns. C3 is, wow, down 10% on that. I don't know if that's the exact reason, but it is down 10% today. All right, we might see a new CEO in C3. Do you avoid selling covered calls through earnings? Yeah, I mean, for Tesla, I didn't, because I kind of felt Tesla would be range bound. But I probably should have been more aggressive on my covered calls on Tesla. But I mean, in general, yeah, like on Robinhood, I'm super bullish, right? So I kind of don't want to really sell tons of covered calls. Same thing for Nvidia. But as a hedge, super out of the money, high delta or low delta, I don't think it's crazy to sell some of those calls going into earnings. Hulk Hogan just passed away? Really? Hold on, actually? Did he actually just pass away? Or is that fake news, bro? There's too many fake accounts. Oh, no, a lot of people are tweeting about it. A lot of people are tweeting about it. Okay, either it's fake news that's going viral or he legit passed away. 71 years old. No, TMZ, he's dead. Hulk Hogan passes away at man. Hulk Hogan passes away. First Aussie, now Hulk Hogan. I used to watch wrestling, dude, back when I was like in middle school. I was big in the WWE. So I Hulk Hogan wasn't really active when I was watching wrestling, but I went back and like watched all the tapes from the 90s on YouTube. And so I do know about him. Cardiac arrest. Cardiac arrest is what TMZ is reporting. Man. Did anyone know how Ozzy was? I think it was a heart issue with Ozzy Osbourne, right? If I'm not wrong, I believe it was a heart thing with Ozzy as well. Looks like it could be the same with Hulk Hogan. Man, that is wild, bro. That is wild. It goes to show, again, Parkinson's. Okay, yeah, that actually makes more sense. He did have Parkinson's. You're right. It goes to show the fragility of life and, you know, the fact that our time on this earth is finite. It's going to happen to all of us eventually. It's kind of crazy, dude. I've always been fascinated by the concept of death, the idea that all of us eventually are just like not going to be here one day. It's like you're here for hopefully, 70, 80 years, and then it's over. It's all over. You got to enjoy every day you get. Yes, you have to make purpose out of this life. And it's very hard to make purpose because there's so many issues in life. I mean, in fact, guys, I think the urgency and necessity to take advantage of every moment is so important that I bought a new watch. I bought a new watch. I knew I said I wasn't going to spend a lot of money on watches, but I bought a new watch. It's right here. And I just want to show you guys that the urgency and necessity to take advantage of life is so important that I bought a new watch, but I made sure that this watch right here does not tell the time. Does not tell the time. And the reason that this watch I made sure to buy to not tell me the time is because the time is always now. It's because the time is always now. And on that note, I think that's how we end out the market open for today. Is because the time is always now. I need to put this watch on and actually like wear it. So here we go. I'm becoming a watch boy. I'm becoming a watch boy. It's not a $20,000 Rolex, but it's I'm becoming a watch boy. Dude, I had this prop on my desk just waiting for the moment for me to use it. I didn't find the moment, and then talk about a segue to give you that moment. There you go. Whenever I look at my wrist, the time is always now. There you go. Dude, this watch is from 2011. Remember when G-Shocks were a thing? Like, I was so obsessed. I was like, Mom, for Christmas, can I please get a G-Shock? And she got me one of these. I think I wore it for like a couple months, and then I got bored of it. But yeah, I still have this right here. It was in my drawer the other day, and I was like, huh. And then it literally doesn't work, bro, because it's like 10 years old. So I was like, oh, this is very consistent with my narrative on the time always being now. So there you go. Someone said you have a watch and you're still late to the streams. Okay, that's funny. That's funny. That's actually is funny. You start the streams early and never late. Yes. Exactly. Just replace the battery. Dude, the thing is, I don't actually like wearing a watch. I did just get a Fitbit though. I did get a Fitbit. I legit bought a Fitbit off Amazon the other day because like I kind of want to track my steps because I'm starting to run more. I'm starting to walk more, and I want to see like how many steps I run. So I did get that. So I'll be wearing that. It also helps track your sleep and stuff. But yeah, I don't actually use a watch. But there you go. And all seriousness, no, like, dude, we're all gonna die one day. Like, it's just that simple. And these reminders of very important people passing away, I think it's just another thing to put a little pep in your step and remember that you got to seize the moment. The time literally is always now. If you're having beef with someone, try to resolve it. If you haven't called up someone you care about, give them a call. And if you have some dreams, you got to work your ass off to try to achieve them. But we have one life to even give us a chance to have the opportunity to see those things happen in the moments that we have, which are fleeting every single day, literally, because we are getting closer to that inevitable day. So there you go. I think that's how we end out the stream. Amit's new watch company is currently right now. That's a good idea. It's a good idea. What if I made a watch company called Currently Right Now? I mean, that's maybe a little bit better than the podcast name. Currently Right Now. The time is currently right now. It's not a crazy idea. Not a crazy idea. Word of the day. Doodad.
Doodad.
A gadget or device. Jamie stayed up all night tinkering with a new doodad for translating cat meows. This kitchen doodad makes only one thing, quesadillas. Has anyone heard this word? Doodad? I feel like I've heard this word a while ago. Doodad? Like I feel like I've heard it on like a sitcom or something. My watch is a little doodad, little gadget right here. But there you go. That is the word of the day. Yeah, from my grandfather. Yeah. It's one of those phrases that was used from the older generation. I wanted to really understand at the ETH deep dive, and then you showed up in a Christmas sweater. Yeah, but that made it more fun. The Christmas spirit, holiday spirit. Dude, we're gonna be towards Christmas season pretty soon. Got a couple months left, and then it's gonna be holidays. My September to December is my favorite time of the year. Christmas, Thanksgiving, Halloween, birthdays. So we'll be getting that soon. Get a smartwatch and make the screensaver literally say the time is always now. My Garmin has a custom background. That's actually not a horrible idea. That's not a horrible idea. In general, I've never liked the feel of a watch. Also, like if I want to know the time, I just look at my phone, and I'm on my phone like constantly. So that's why I never saw the purpose of it. But yeah, that's why I don't wear it too much. And I don't think I'm ever gonna buy a watch, bro. I know people say it looks cool with like an outfit or whatever, but I've never liked a watch. I like rings. I like wearing rings, but never been that into watches. Did you see on the Hood Q&A about issuing a dividend? Yes, the number one voted question on Hood's Q&A for earnings is when dividend. I don't know what people vote on these questions, but it's a bit ridiculous when they do. I mean, the stock's up 300% in 4 months, and they're asking for a dividend. It's a bit weird why they asked for that. But they did the same thing on Tesla. Tesla, one of the top 5 questions was, hey, when are you guys giving a dividend? It's just like, it's not the time for that to happen. All right, folks. I think that's it. We are done. We'll be back on the close. Hopefully, we'll get Steve to join, and we'll get some more of his thoughts on what's going on in the broader markets. Again, kind of flat throughout the day. We'll have that J. Powell Trump meeting and see what goes on there. 635.50 on the S&P. That is a all-time high. Nvidia just below 179. Robinhood stuck at 101. Palantir trying to get back to 155. American Eagle, based on Sydney Sweeney, is up 6%. Amazon trying to break 232. Ethereum making a little bit of run. BMNR, that's having some gains today. Google should be at 220. It's at 193. And then Tessie not breaking below 300. But by the end of the day, we're going to see if Tesla can hold at these levels as well. All right. That's it. Thank you, everybody. Appreciate everyone being here. We'll be back on the market close, and we'll keep going from there. The time is always now. And again, rest in peace to Ozzy Osbourne and Hulk Hogan. But got to take advantage of the moment. Got to take advantage of the moment. All right, everybody. We'll have Intel, Coca-Cola, and Deckers after the bell, and we'll keep going from there. Bye, everybody. Have a good one.